Good morning, everybody. Good morning, everybody. So um, let's go ahead and go over this long-term view so we can get to these trades that we're looking for on our intraday charts. 1 second, and we'll go ahead and get that thing started. Um, Yesterday was an extremely bullish day. So let's see what this thing looks like. We're still inside day on the quarter, right? So if you look at your quarterly chart, going to be a while, but we look at it every day to kind of see how it's forming and what it's doing. Working off a bullish outside bar from the previous month. From the previous quarter, excuse me. So we just can wait and see mode really long term. We have on the monthly chart, we have a trend down with a correction. If it doesn't get above these highs and that correction holds in, gets below this line, market's going to come a tumbling. So keep that in mind. But what the weekly is concerned, we're in a zone, right? We're in a equilibrium zone here. And we have to see if she's going to hold or she's going to try to take off. So we just wait on that. As far as the daily is concerned, yesterday, as you noticed, it made a huge move to the upside, but my thoughts are that we're either going to consolidate or come back down for right now. So we just have to see. That is everything from the standpoint of the long-term charts. Now let's get to this intraday trade. And that's it, ladies and gentlemen. We're just waiting on everything we want to see. It's a no-go until that happens. It's a no-go until that happens. Quentin, did we finish that how to turn 5,000 to a million yesterday, or do you know where you left off on it?
I got it queued where we left off. Hold on 1 second. Got it right here. And we can pick. Let's see. We were on chapter 19. So just let me know when you want us to start it.
We can go ahead and get it started now because there's not anything going on. That long-term and short-term momentum on the 8100 is definitely crisscross. So we got to wait for everything to line up as far as that's concerned. So you go ahead and cue that up.
Okay. All right. Ladies and gentlemen, just want to remind everyone to email support at theprofitstalker.com if you have any questions or you want to receive a copy of the book, Limitless Cash Flow. And we're off to the races.
Ooh.
So-called path dependence. This phenomenon occurs especially in sideways movements or minor corrections in a trend. As long as the market moves in the desired direction, the return is even slightly stronger than the original leverage. If it goes the other way, the ETF usually underperforms. This disadvantage has an impact on long-term exposure to a market, which is why I believe leveraged ETFs are not suitable for long-term investors. For speculators who enter the market in the medium term, 1 to 3 months, and above all, rely on a strong move in the underlying, I think it can even be an excellent instrument. Probably the easiest and most flexible tool for a retail investor are the Forex markets. Here you can even participate with very small amounts, under USD 1000, and maybe the Forex market is also the best starting point for this strategy. However, here, one should also note the amount of the financing costs, which are better known under the term swaps. Swaps are interest rates incurred on borrowing, which is usually a Forex position. Interest rates of 5% may well occur. Therefore, when choosing a Forex broker, you should pay less attention to spreads and levels of leverage than swaps. An in-depth comparison of brokers in this regard can mean that you may save several $1,000s. This is particularly true when dealing with exotic currencies, i.e., Currencies that are not part of the classic Big Seven: Euro, US dollar, Great British Pound, Swiss franc, Canadian dollar, Australian dollar, and New Zealand dollar. These are, for example, currency pairs like US dollar / ruble, US dollar / Mexican peso, or euro / Turkish lira. The swaps in these currencies can accumulate significantly if you invest in one of them for months. Chapter 20, Maximum Risk and Margin Call. If you decide to trade with professional instruments, such as futures and options, you should know that from the point of view of risk management, you are considered as a professional partner. Futures and options transactions are generally subject to an obligation to make additional contributions. If the losses from your positions exceed the margin coverage, you will receive a margin call from your broker. This means that money has to be topped up. Otherwise, the position will be closed. If you do not like the idea that, theoretically, you can lose more than you have available, you may want to refrain from trading these instruments. But when talking to brokers, this occurs relatively rarely in practice. Usually the margin calls are already threat enough to a trader to reduce the position or close it completely if necessary. Nevertheless, as a trader, you should be aware that the requirement for additional funding exists. If possible, you should never let it get that far. Several brokers I've talked to about the issue have assured me that in the rare cases in which this happened, they were always able to reach an agreement with the trader. By contrast, if you trade derivative instruments, such as CFDs or Forex, you are usually on the safe side, at least within the EU. Because of the strict regulation of the European Supervisory Authority, ESMA, which has been in force since the beginning of August 2018, the high leverage for private investors has been severely limited. Previously, leverages of 100 to 500 were common, but they are now limited to a maximum of the factor 30. Depending on the underlying value, they are even lower. With stocks, they are about 5 at most. Traders are therefore not obliged to make additional contributions, should the deposited security no longer be sufficient. The losses cannot exceed the invested capital. If you want to guard against such an event, despite this rule, you can look for a broker who offers a guaranteed stop-loss order. Here, the broker guarantees the closing of the position exactly at the desired price. The broker therefore bears the risk and must pay the costs of deviations himself. In return, the trader usually pays a fee for this guarantee. The fee can also be collected by widening the spreads. You should therefore consider this charge as a kind of insurance premium. Talk to your broker and ask him if he offers guaranteed stop loss.
Stop it for a second.
Keep your trade.
I forgot to announce the news this morning. 6 a.m. we had a yellow folder, NFIB Small Business Index. Let's see, 8:30 we had a yellow folder, Trade Balance. 12 p.m. we'll have a yellow folder, FOMC Member Bar Speaks, and we have a tentative folder, RCM/TIPP Economic Optimism, and that's it.
All right, thanks for that.
All right.
To yourself. As a speculator, you'll have to be prepared to do unpopular things if you want to make some serious money, or if you want to move your account forward. And not everyone is going to like what you're doing. I would like to give you some advice as a trader friend. If possible, do not talk to anyone about your trades. Open an account with a broker and do your transactions. Do not talk about it, not even to your friends, and certainly not to your family. The reason is simple. Hardly anyone will understand what you are doing. I do not mean understanding in the moral sense, but technically speaking. For example, if you do a short sale, no one will understand it, even if you do your best to explain it to them. If you buy USD/Russian ruble, technically speaking, you are long US dollars, short Russian rubles. Try explaining that to your grandmother. She has never done it herself. She will not understand. Look at the stock market reports on the news. They hardly ever report on what really matters. The media craves sensation, panic, or drama, or they wag their moral index finger at you. Rarely do they report facts about what is really happening. So do not be surprised when your friends, acquaintances, or family babble about what the media presents them with. And do not expect anyone to show understanding for your new occupation. That is something you will rarely get. Regarding the impact and the task of the financial markets, the general public is stupid. It is deliberately kept stupid. That might not appeal to you, but it is a fact. There are countries where trading is a little less stigmatized. This is the case, for example, in the USA. Unlike in Europe, people there are happy when you are successful. But I can assure you that this is much less the case in most
market performing on the 900.
speculators as a simple way to blow off steam on something.
Yeah. It's a good observation. We just need to see everything also lining up in terms of the your momentum and down the momentum's down at the bottom.
Okay, you can the momentum on the 900 as well.
Right. So yeah, good observation. No, good observation. Yes.
Okay.
I won't chime in. Sometimes I'll be a fly on the wall. That was good. That's good dialogue, guys. Good dialogue. Right now we don't have anything just yet, and the reason why is because it's on my resistance line. I'm sitting right there, 64, 65. I'm not trying to take something that's sitting right there on that line, right there, because it might go through. Then again, it might not. So, we're in wait and see mode. Plus, this bar has to complete before we'll know for sure whether or not the market is actually down. Y'all forgive me, I didn't put them up. All right, there we go. So we just need to wait. We just need to wait on everything to kind of line up. I really would rather have the loan first, or to get through this area and then pull back. One of the two. So let's just wait on it to see what's happening here.
Back up again. Good observation there. And thanks for the commentary.
You do not understand. But there's a much more important reason why you should keep your trades to yourself. If you start talking about your plans, or even about ongoing positions with your fellow human beings, they will respond in some way. The best thing that could happen to you would be indifference, because that harms you least. But imagine if I had told an acquaintance that I was speculating against the ruble. Maybe even in the days when everyone could see on TV how people in Russia were queuing up outside the exchange office to get rid of their rubles. Do you think I would have made friends like that? Of course not. That could incite very moral thinking people against you. You would have to begin defending yourself, or you might even have to begin justifying yourself. And that's the last thing you should do if you're in the middle of a speculation. These conversations, or discussions with people who have no idea about the matter, will only confuse you in the end. Worse still, it could cause you to begin to doubt the one thing with which you might have financial success. Now, there are quite a few traders who solve their need for communication by visiting so-called like-minded people. Either they belong to a stock club, or they search the internet for forums or chat rooms in which they can discuss their trades to their heart's content. I admit that I did this in my beginner's years too. I started in 2001. At that time, the trading forums were something new. In fact, at the time, you were sometimes able to meet a successful trader who was willing to share his experience with you. However, I can tell you from my own experience that the vast majority of successful traders I know have long since withdrawn from these chats and stock market forums. If you really have something sensible to say on the subject, and you are constantly being attacked by some dummies, what do? Right, you take your hat and disappear forever. I do not want to rule out that there are no idealists who still visit these haunts, but sometimes the level in the pub around the corner is a haven of philosophy and human knowledge compared to what you can experience in stock market chats. I have long since said goodbye to that, over 10 years ago. I would rather recommend telling your mother-in-law about your stock market engagements than that you set foot in one of these internet chats where no one has to answer personally and almost everyone participates under a pseudonym or several pseudonyms. So do not do it. The reason is the same as your family or friends. The chance of these people clouding your unbiased view of the markets is quite large. Remember the attitude of Jesse Livermore, who even locked himself in a room so he could not hear the chatter of the other speculators. I never made money while I was in these forums. On the contrary. And that brings me to my real concern. No matter what you do in life, whether you're starting a business or starting a trading business, you'll have to do it alone. You'll have to go this goddamn way alone. And you cannot allow anyone to interfere with it in any way. Least of all, your mother-in-law, and certainly not some idiot on the internet who hides his true identity from you. I cannot stress this enough. You will only be successful when you start to become an independent trader personality. Now, everyone knows that there are only a few of them. The vast majority of people play the game safely and wander on much traveled paths. There's nothing wrong with that. If you like, I can also say it esoterically for those who believe in it. If you have chosen to push a quiet ball for this incarnation, then look for a safe government job. Find something in the administration, or how about a job at the tax office? If you want success, real success, then you will have to do something unusual. You will have to do things that those who prefer to push a quiet ball do not want, and therefore reject. I hope you now understand why it is better to keep your financial affairs to yourself. Chapter 22. On the way to the first million. $1 million is certainly a high target, especially for someone who has just over a few $1,000s available to speculate with. However, I hope that, with the examples I have shown you in this book, it will be possible to make significant profits on the stock market with small sums, no matter what some skeptics say. If I can do it, so can you. But even though duplication and multiplication in small accounts are quite feasible, they are not so easy to achieve for larger amounts. But not impossible either. As you know, you only need to double 10 times to make $1 million from 1,000. It is hopefully clear to the reader that the step from 1,000 to 2,000 is quite different than the jump from 250,000 to 500,000. Although mathematically it is the same principle, everyone who is active on the stock market should be able to get over the loss of USD 1,000. But can you afford to lose USD 250,000? I'm well aware that there are traders who have suffered such losses, and even much more. At the end of this book, I would like to emphasize once again that you should not let it come to that with the method presented here. The idea of this method is to take calculated risks. This minimizes the risk of a total loss of the available capital. You should become a specialist in speculation, achieving the maximum with minimal effort. Precisely for that reason, I recommend that you deduct the majority of your profits from the brokerage account and withdraw them from the speculative cycle. If you ever make USD 30,000 profit with a speculation, then withdraw at least USD 20,000 from the brokerage account. For the method presented here, by no means do you need USD 30,000 to speculate. On the contrary, I recommend keeping these totals small. This measure will teach you discipline. If at first glance, this method could be classified as high risk, but this measure makes it less risky than initially suspected. The highest risk is in the beginning, when the available capital is still small. The further you progress, the less risky it will be if you consistently enter the market with just a small test position at first, and only buy more when you already have booked profits. Of course, you can risk a little more if you can call the first USD 100,000 your own. But since for most speculation, usually no more than a few $1,000s margin are required, there's no reason to leave USD 50,000 in your brokerage account. Be smart and minimize your initial risk as much as you can. Maybe it will go a bit slower until you reach your first million, but you will reach your destination without undue stress. Maybe you are able to make profits of USD 100,000 a few times, or The money will trickle in gradually in USD 40,000 snacks. No matter how you do it, you should make sure that you put away most of your profits and never risk them again. This measure is just the opposite of what most traders do. They leave their profits in the brokerage account so they can trade more and more contracts. For these traders, therefore, the bigger the account gets, the more the risk increases. I try to do the opposite. The further you progress, the more capital you should always draw from your speculative cycle. Remember, trading profits are not really yours unless you have completely withdrawn them from your brokerage account, and preferably locked them away or invested them conservatively. That way, you will have the highest risk at the beginning of your career as a speculator, and not at the end. Be smart. You can always speculate, but lost investment capital never comes back. It is important to clearly understand the difference between a speculator and an investor. They have different goals, and therefore use different methods. The goal of a speculator should be to progress financially as quickly and efficiently as possible. In this book, I have tried to portray how that is done. The goal and task of an investor is a completely different one. An investor already has capital. His primary objective is to protect existing assets and to maintain purchasing power through a realistic and risk-free return. I hope you realize that these are two completely different goals. The ultimate goal of your endeavor is not to have the largest possible amount of money in your brokerage account, but financial freedom. We will look at how to achieve this in the next chapter. Chapter 23, the final goal, financial freedom. Even if the first million seems like quite a distant goal to many, it is not out of reach. The method presented here can be regarded as an important step on the way to this goal. It need not be the only one. By the way, I consider the nominal sum of $1 million more like a symbolic goal. As strange as this may seem to not wealthy readers, $1 million on the bank today is more of a problem than a solution. The times when such a sum would give you a yearly risk-free interest yield of 5 or 6% are long gone. And those countries with higher interest rates do not necessarily offer a solution either, because the compounding will be eaten up by the inflation, or alternatively, the fraudulent state will seize the capital on a flimsy justification, as happened to a friend of mine who had parked a considerable sum in a Ukrainian account. In other words, current interest rates are forcing anyone with some money to become an investor, whether they want to or not. The method presented here aims to make quick financial progress. It's undoubtedly an unorthodox method, but trust me, it's being used by more traders than you'd expect. Many a trader, who perhaps outwardly sells a particular system with strict risk management, secretly does exactly what I'm talking about here, without ever saying a word about it in public. My only goal with this book has been to present a way with which you, as a trader, can quickly achieve your financial goals. Of course, you can also do it with traditional trading methods, such as day trading or swing trading. These methods are and will remain valid, but they demand an unshakable discipline from the trader that most of us, let's be honest, do not have. That's the reason why the number of traders who fail with these strategies is so large. The method presented here assumes that most of us are not disciplined traders, but ordinary people who make mistakes every now and then. But if, as suggested here, you bet on specific events or strong stock market trends, you only need to be right a few times. But then, when you are right, you should have the courage to step in big. Many traders, like Jesse Livermore, did it this way, gradually working their way up from humble beginnings. Of course, you will not succeed with every speculation. Sometimes your position will barely earn you any money. Sometimes, maybe only a few $1,000s. Do not feel discouraged. If you stick to this idea, you will one day find the market in which you can make USD 100,000 or even more. If you skim off USD 70,000 of this money, you can buy a house or another asset. Invest this money into something you will still benefit from in 10 years' time. Preferably, buy an asset that flushes money into your pocket monthly. The latest Tesla, for example, does not fall into this category. This toy will pull money out of your pocket and will be worth less month by month. And that brings us to the important difference between an asset and a liability. An asset regularly flushes money into your pockets. A liability, on the other hand, costs you money. I owe this clear distinction to the books of Robert Kiyosaki. If you do not know them yet, I recommend you buy them now. Another way to generate monthly cash flow is to build a dividend portfolio with your earnings. This is one way to profit from your profits over decades. It's really fun if you have something like that. Believe me. You then own a cash machine that will bring you money every month without you having to do anything big for it. In other words, my recommendation is that you do not go from speculation to speculation until you finally have this million in your bank account. Cash machine.
What's up?
If you go to that last arrow that printed, well, no, it was a green bar that printed at 10:01 on the 300. Over here on my end, it gave me an arrow up, and I just wanted to ask if that was a legitimate entry. I did see it gave you like a little pullback on the 900, but I just wanted to ask about that.
So I'm going to take you back to what we did yesterday. It took a long time, and we waited for everything to line up. So if you look at your 8,100, yeah, you do see your moving averages going up, but you don't see your momentums in the same direction. You don't see that also on the 900 right now. So you're right about what you're seeing, but we want to have everything lined up because what it did yesterday. I know you remember. It gave us the greatest chance to. Everything was moving in our favor, so we could put on as many contracts as possible. So that's what we're looking for. But you're right in what you see.
Okay.
Are you looking at enter on the 300 or is that your trend chart?
You talking to me, Keith?
No, I'm talking around.
What you say?
You said you saw a pullback on the 300, which I see with the arrow. That was for your entry.
Oh, well, no, I saw the pullback on the 900, but it printed out on the 300. I think it was there's a green arrow at 10:01.
Yeah, I see that.
And it gave me an arrow up, and I was just asking if that would have been a legitimate entry. I mean, it clearly didn't work, but
I would say, based on what you're doing, if you're using two charts, if you're doing that, but you also got to look at the 8,100. It's not like, I mean, if that's what you're using for your decision ticket, but it's in consolidation right now.
yeah.
So he had that line drawn for support, but you probably also need to look for a resistance line at the same time. So I would say it needs to break about 700, maybe a little bit more to get out of that range.
Yeah, it's definitely keep moving, like you said, sideways on the 8,100 or consolidating. Make sense, Ronald?
Keep looking, because
Yeah,
I think you're right. I think the reason it didn't work because it's sideways right now.
Yeah.
You just got to recognize that.
And it's funny, I didn't even see a arrow print on the charts we're looking at right now.
It didn't. He's looking at his charts.
I got you.
Yeah, I'm looking at the chart here.
Let me look at mine. Hold on a second and see if I got the same one. What time you said it was, Ronald?
It was at 10:01. It was a green arrow at 10:01.
Yeah, I see it on my charts.
Okay.
I do see that on my charts. Let me put the crosshairs on that here. Yep. 10:01.11 seconds. I do see that. But I tell you, in a perfect world, though, if everything was lined up from the 8,100 all the way over on all the charts, and you got that arrow, then that's what we want to be looking for.
Yeah. Yeah.
Am I right?
In theory, yes. You're all right. I have to go back and look and see what everything else was doing as far as did you get a market structure on the 900, did you get the quote bar on the 20, all that stuff. But yeah, once everything's lined up and that arrow pop up, that's the trade.
Yeah, that sounds good, man. Yeah, I have to make sure I ask those questions when they come to my mind. I know it's a little, they be a little repetitive sometimes, but it helps to, it helps for it to stick in my mind.
No, always keep asking, man.
Yeah, and for the live content, I mean, you just, I mean, the more conversations you can have, the better, and it just helps everybody understand. So when Quentin gets to explain what he's thinking, if I get to explain it, then that helps me too. So ask your question.
Yeah, keep asking questions, man. Keep asking questions. Ladies and gentlemen, also, too, if you have questions, you can email them at support@theprofitstalker.com. And you can also subscribe to this YouTube channel if you haven't done already. In fact, I encourage you so that you can get the notifications so that you can get this opportunity to catch our winning trades and also learn from the ones that we wait on or ones that we have challenges with. Thanks. I'm going to start the cue the book back up.
All right.
That will bring you money every month without you having to do anything big for it. In other words, my recommendation is that you do not go from speculation to speculation until you finally have this million in your bank account. It may sound great to say, I am a millionaire, but this title does not mean much in times of zero interest rates. And you may be surprised when I say now, it is even not desirable to have 1 million on the bank. I want to explain this with a nice story. A friend of mine founded a company that he wanted to sell one day, and he also had enough interested buyers. He figured out he could get $4 million for his business. Many would say, great, now he can really cash in and live from the fruits of his labor. Not even close. My friend kept delaying the sale of his company. Why? I asked him when I met him again. It turned out he was really scared of the sale. Of course, there were various reasons. But one of the most important was that he felt safe as long as his business belonged to him, and he was able to pay himself a generous executive salary month after month. Because if he sold the business, he would no longer have a salary. Yes, but you could have 4 million in the bank, I countered. Sure, he answered. Only this money will bring me hardly anything. What am I going to live on? This story may seem absurd to some readers, because they believe that anyone who has that kind of money in the bank will no longer have financial problems. Unfortunately, the opposite is true. If you have 1 million or even more in the bank, then you actually have a problem. As absurd as it may seem to less wealthy individuals, this million in the bank is nothing but a pretty bourgeois dream. This dream is also the reason why so many people play the lottery. And it's also why so many lottery millionaires lose everything after a while. This million brings you hardly anything today. My friend knew that. Unfortunately, during his entrepreneurial life, he failed to invest the money he earned into assets that would have earned him a monthly cash flow. That is, a passive income. He had hardly any real estate. He had speculated a little with stocks and mostly lost. Unfortunately, the word dividend was alien to him. Rather than hoarding 1 million on the bank, or even in a trading account, it's important to learn how to invest that money properly. In other words, in addition to your speculator career, you should also silently build up an investor's career. Because that's what the really wealthy have always done. They always have money, no matter what happens, because they, or their ancestors, have invested capital over and over again in assets, land, real estate, company holdings, licenses, lease income, dividends. And when the cash flow for these assets began to exceed the sum of their monthly expenses, they used that free cash to buy even more assets that brought them even more money. In the so-called old money families, this was done from generation to generation. And that's exactly how you should do it, in my opinion. You should not use your occasional stock market successes to build up an ever-growing account, with which you may splurge with your friends. No, do it right from the start. Learn to siphon off most of your profits and invest them in long-term assets. Do not wait until you have 4 million in your account, because then you.
Okay, Ronald, tell me what you see on the charts, man.
We got everything's green. The momentum, well, the long-term momentum's flickering on the 8100, but it's trying to turn green. But on the 2700, the momentum's green. We actually getting some pullback on the 900. We might have something coming up.
Yep, you're exactly right. That 8100 is flickering, so we want to pay attention to that. It's kind of moving at a snail's pace, so we got just a little bit of time. So, but you're right. Keith, do you see something different, or you want to expound on the observation?
I agree exactly what he's saying. Yeah, it did break through that resistance. So let's see what happens if it bounces back and gives us a retest on the 8100, or if it keeps pushing up. Then we'll see if we get a setup like what we're looking for. Just go from there. But yeah, it's actually making some movement. So see what we get.
And so, Keith, I'm gonna ask one more thing of you. I know you've been doing it longer than I have. Can you get a little more granular on any of the charts, or take a deeper dive?
Well, let's see. What I'm really looking at is the 8100 to see if if it goes back into that if it breaks through that support now. If it keeps pushing up, then I think you're good. There is an ABC pattern on the 8100.
Yeah, I do see that.
So you have to look at your 24,000 chart to kind of see what else is going on in the market. And my guess would be, since that long-term momentum, but it's just starting to go green. So that might give you an idea of what's going on in the 24,000 chart. So let's keep looking and see what we get.
I don't see
wait for that part to close.
I see a support line, but I don't see a resistance line drawn.
It's not.
It'd be interesting.
It would have been roughly about 700 to 703, somewhere in that area. But you can see where that range was sideways for a second, right?
Okay. Oh yeah. Okay. Oh, I see what you're saying. All right. Thanks, Keith.
Whenever you start looking for loans could that be off of ABC, off of it didn't break that low down there, so that's a higher low. That last pullback didn't get below it missed it by a couple of ticks, so that's a higher low on the 8100, which would be a reason to take the trade. So things are looking to start lining up.
Yep. All right.
You gotta wait 63,100 more contracts to see to ensure that long-term momentum gonna close up.
All right. Can you flush the 300, please? All right. Thank you. All right. I'll queue back up until, but I'll be watching it. We all watching it.
Might have the same problem as my entrepreneur friend, or the same problem as the lottery millionaires, who disappear after a while. Therefore, in my eyes, the goal of 1 million in the bank is a decoy. Such a sum may inspire your imagination. It is, however, better if you increase your financial IQ right from the start and learn how to invest in the long term, so that you can still benefit from this money decades after your stock market successes. It is possible, but only if you start right from the beginning.
I mean to stop you. I got a question.
And lock it away. With the rest, you can.
So I just want y'all to hear me out. I want you to just, I'm trying to make sure see where I'm at, because this is what I was thinking. If you look on the 900 chart at 1010, it started pulling back. It started going down, right? And then if you look at 10-12 on the 300 chart, it started coming back up. It printed a green arrow at 10-12.
On
right?
On the 300?
Yeah.
Okay.
And so in my mind, that's what I was saying in my head. I was like, okay, if a green arrow print, I would enter, right? So a green arrow printed, I would have entered. Then, and I just want y'all to tell me if I'm right or wrong. So then I would have, after I would have entered it, it came down. It was some pullback on at 10-13.
Mm-hmm.
And I think I said I would have entered again if it would have broke that high.
Yeah, on there. Yeah. You're correct. Based on the only reason why that arrow doesn't work based on the 4 chart system that we were using is at the time you got that arrow, that first arrow at 10-11.
Yeah.
The momentum on the 8100 was not in your favor yet. And that's
On the 8.
that's the only reason. That's the reason why that's not a trade. But if you just trade in price, it's the indicators that held you back on that. If you're just looking at price, then that's a go. The indicators didn't confirm what you were seeing in price. But price action, I think you're right on it. You're right. That's an entry, then that's another entry, and it's still going. So that's another entry on this arrow right here that just popped up.
Yeah, but
It's taking
and
off.
I think, and I think that would have, because that's like that moment. You know what I'm saying?
It's a turn, so
Well,
you
I
catch
don't
the
know.
turn.
Like, right before it turns. Yeah. Like that would have been a good moment, I guess. Like,
Yeah, it would have been.
I mean, it's like it's 14. Go ahead.
And that's rough. I mean, that's I
our
definitely
faith
understand.
in it.
I definitely understand that. Yeah, that's I mean, and it's also when that trade happened, it was still flirting right around that resistance area, that resistance area. So you would have been willing to take it, hoping it breaks through resistance. Now what you're looking at, right now what you're looking at, it took off and went through. So after it breaks resistance, you generally want to wait for a retest just to see what's going on, or you want the strong trend. Like right now, it's pushing up. So, I mean,
another line at like 16,700.
Yeah.
So it may try to go up to there.
They done broke that.
16,000. Oh yeah.
It's way past that. That was it broke through there.
I'm sorry, 700. It's another line at 770.
707. Okay, yeah, it broke. It's at 739 now.
So at this point, I would also be thinking on the 8100, we need to be looking for a pullback because everything is lined up.
Yeah, it's getting there. I mean, you don't really right now. Your reason to take the trade. You see that poke bar on the 8100.
Yeah.
Okay, that didn't happen quite yet where you wanted it to. So your trend is up. Remember, 8100 is about momentum.
Hold on. Okay, so if you look at the 900 plus that one. See, we had a little bit more pullback, right? On the 900.
Yeah, I mean, momentum's up.
Everything's not completely lined up.
Yeah, if you get a poke bar on the 2700.
Everything's not completely lined up though.
It's not lining up like you really want it, but it's coming. You just gotta be patient. Hopefully, but I feel you, Ron. You feel like you missed something because that thing took off.
Well, no, I was really the main one that I was trying to talk about was that one from earlier. That was why I was saying like it just seemed like it was more things in our favor than against us.
Yeah. On that trade right there, you had everything in your favor except for long-term momentum.
You said except for, and the first thing that came to my mind was money management and risk management, because those
Yeah.
supports can mess us up in the long term.
Yeah, yeah. And at this point where we are with the trading and things like that, from my understanding, we want to wait for everything to line up and then
Yeah.
take that trade. If you're up, if you're up for the day or up for the week or however however you're managing your money, your wins and losses, if you're up, and you got 3 out of 4 things, 3 out of 4 in your favor, then maybe you risk one contract to see. But I don't know if that's how you want to start your day.
So let me tell you, let me get you to think about this, Ronald. Remember yesterday, we waited probably a few hours, and we ended up with a cumulative points of 43.5 between me and you. And we were able to stop the day because we made the day just like that. And not only did we do that, we also recovered from the losses we had last week in just that period of time. And it was because we were patiently waiting for what exactly we want to see. Not kinda, not sorta, not we got this except, but we waited exactly what we want to see. And that right there to me is getting me to the training me to be more patient, because I know we're going to get at least 1 or 2 opportunities to have it big.
Mm-hmm.
And that's the discipline behind it. And that's the discipline, the mentality to sit there and wait it through. But Ron is young and hungry. So and so, and that's like I said, I mean, but the first trade that you wanted to see that you thought about, you saw what happened to it. It hit resistance and bounced down. But this one right, you're right. Everything, a lot of stuff was in your favor, except for one, you were missing one small thing. So, you wait for everything to line up, and that's a higher percent. You want to take that trade that has the highest probability of winning. And then
I
you can
got
take that trade with confidence. But I mean, that trade obviously works, but you just gotta, understand that wasn't our trade. It was on another time frame, or you gotta take solid and like just remember, it's 50-50 on those. Sometimes they work, sometimes they don't. When everything lines up, it's like 90%, 95%. That's a better chance, So you can take the 50-50 and be happy half the time. And the other half you mad. So, just
yeah.
yeah. So, and like I said, you just have to follow your trading strategy. And our trading strategy right now is wait for everything to line up. Wait for everything to line up and then take the trade. Versus, not some of it, not most things, but at some point that might change. But for right now, that's where we are until we hear different.
Yeah, that makes sense. Makes sense.
What was the news? Is the news coming up?
It come out at 12.
Well, all right. It's a yellow folder. That's what I remember Bar speaking. Trade balance. And like I said, keep asking, because even if we having philosophical debates on whether or not what we're gonna do, I know the setup that we're looking for, we don't want to think too much. We want to see it and go. See it and happen, and see the trade and happen, which can happen when everything lines up. But I think it's good for those trades, the conversation to happen. I enjoy the book, but I think for our live viewers, when they get on, whatever time they want to get on, they probably want to hear more conversation. So if there's conversation to have, by all means, let's have it. But we also don't want to just be talking for the sake of talking. So, but if you got a question, ask it. And people who are watching live, you know, you can type it in the comments as well.
Oh,
On
yeah,
that note,
most definitely. We'll keep them coming.
Okay, you got another question, Ron?
No, I'm good right now.
Okay, on that note, I'll start the book back. Thanks for the dialogue, Keith and Ronald.
Continue
No
to
problem.
speculate.
Real quick, for the people listening, you aren't seeing any arrows on the charts because we're looking at another set of charts. So going forward, let's not necessarily talk about the arrows because the arrows is basically the market structure, the end of the trade. So let's go back to looking and put entering the trade on the ABC pattern. But because it's confusing people who are looking live, we're watching live, I believe.
Okay, good observation, Keith. Thanks for explaining. I'll start the book back.
Opportunities. I wish you success. It is possible, but only if you start right from the beginning. So take the most of your profits out and lock it away. With the rest, you can continue to speculate and hunt for lucrative opportunities. I wish you success. Addendum 1. Past financial crises. The history of the financial world is rich in financial crises. As I said, whatever is dangerous or ruinous to some may represent an opportunity for others. That has always been the case. If you want to become wealthy with stock market speculation, you are well advised to study past financial crises. Here is a list, which is certainly not complete. Study these crises. You will then be better equipped to recognize future ones. In addition to the crises, you will also find the possible speculations that you could have traded successfully. 1973, oil crisis, long oil, short stocks. 1973, banking crisis, United Kingdom, short British equities. 1983, bank crisis, Israel, short Israeli stocks. 1986 through 1991, Japanese bubble industry, short Nikkei, long yen. 1994 through 1995, tequila crisis, Mexico, short Mexican peso. 1997, 1998, Asian crisis, short Indonesian rupiah, Thai baht, South Korean won. 1999, Brazil crisis, short Brazilian real. 1998 through 1999, Russia crisis, short Russian ruble. 2001, Turkish crisis, short lira, short shares. 2001 through 2002, Argentina crisis, short Argentine peso. 2000, dot-com crisis, short Nasdaq. 2007 through 2008, subprime crisis, long gold silver, short stocks. 2008, Iceland crisis, short Icelandic krona. 2007 through 2008, Spanish real estate crisis, short IBEX, Spanish equities. 2010, Greek sovereign debt crisis, short AFEX, Greek equities. 2010, Spanish savings bank crisis, short Spanish stocks. 2010, Euro crisis, short euro. 2014, Russian financial crisis, short ruble. 2018, Turkish financial crisis, short lira, short Turkish stocks. As you can see, there is no shortage of crises. Almost every year, there is a fire somewhere from which you can benefit as a speculator. Incidentally, there are not many different types of crises. Here is a list of the most important types: banking crises, currency crises, speculative bubbles, sovereign debt crises, a state cannot repay its debt, economic stagnation and recessions. If you want to deepen your knowledge of financial crises, I can recommend the following books. Barry Eichengreen, Hall of Mirrors, The Great Depression, The Great Recession, and the Uses and Misuses of History, Oxford University Press, 2016. Ray Dalio, Big Debt Crises, Bridgewater, 2018. Carmen M. Reinhart, Kenneth S. Rogoff, This Time is Different, 8 Centuries of Financial Folly, Princeton University Press, 2009. Robert Z. Aliber, Charles P. Kindleberger, Manias, Panics, and Crashes, A History of Financial Crises, Palgrave Macmillan, 2017. The End. How to Turn 5.
Okay, ladies and gentlemen, that was a great book there called How to Take 5,000 and Turn It into $1 million. And now we're going to proceed to the next book, Trading in the Zone by Mark Douglas.
Hey, Quentin, before you cue that up, I'm going to chime in. Ladies and gentlemen, I am starting to do a few things, and I want to explain that out loud for everybody. I'm allowing my guys here to take more control so that they can learn, because you learn more by doing than by sitting watching all the time. So I'm allowing them to kind of come to their own conclusions and learn. And if they do something or say something that's egregious or definitely wrong, I'll chime in. But if they don't, I kind of just let it go. And they're doing an excellent job, by the way. They're doing a fantastic job with the dialogue. They're talking about a lot of stuff that we're talking about. I want to get into a few things, and let me handle what goes on in the audience first. Somebody said, well, we don't see the arrows on the chart. What we have is we're testing an algorithm that we've had a company put together for us, and we're testing it on different charts to see what it looks like right now. So if you don't see it on my charts, I'll put it up just so you can see what we're talking about. But we're testing that algorithm out right now. And it's not something that we're going to put out to the public just yet, because we've got to make sure it works, right? And the other thing, I had a question in the chat about an ABC pattern. I don't want to get into it online because we're looking at trading live, but what I will tell you, ABC pattern is a reversal pattern. If you go to my playlist, there's a series called How to Read the Stock Market. If you go there, you can literally, it may take you an hour and a half. May take you about 2 hours. It's about 2 hours, 3 different parts to it, but it explains all of the things that we use in our intraday trading from a price action standpoint. And the ABC pattern is in section 2, if I'm not mistaken, part 2, if you just want to go to that. So anyway, I just want to put that out there. Ronald, and let me address some of your questions really quickly. You are right, that was a trade, right? But it wasn't a trade. What I have you guys trading is, I don't want you to be discouraged if you get into a trade that doesn't work. Because what happens from a psychological standpoint, and this is where my salt gets his worth, so to speak. The psychological part is I'm trying to prevent you from falling down those pitfalls of having trades to lose, and then not realizing that it's still a legitimate trade and you should get back in it, which happens a lot of times in consolidation. It happens a lot of times when everything's not lined up. The reason why I'm having you to make sure that all charts are lined up is because it gives you the highest probability to be able to scale into a trade. And our goal is to be able to scale into a trade. I don't care anything about getting 1 or 2 contracts. Yesterday, we were in a total of 6 contracts, right? And we started with 3, and then by the time it was said and done, we had 6. We doubled our amount, and that's where you want to be. If you're looking just to trade and scalp, that's a completely different ball game, right? If you're looking at, hey, I'm just going to get 2 or 3 points here, 4 or 5 points there, 6, 7 points here, 10, 11 points there, whatever the case might be, then that's a different level of trading or different type of trading. And you use a smaller time frame, you use fewer number of charts, that kind of thing. So it wasn't anything wrong about the trade you were talking about. It's that trade, for all intents and purposes, just would have been a trade that you got into, made profit, and then got out of until you saw everything lined up on all the other charts. As far as, there was one more thing I need to discuss, and it slipped my mind, ladies and gentlemen. Give me a second here. But as far as everything is concerned, as far as I'm concerned, the whole point of me of being on YouTube, the whole point of me showing you what we do inside of our private trading room, there's a group of 5 of us, right? It's just so you can see what professionals look like, and it's not just about trading. It's more about the psychological part, and it's more about you being able to watch and see 4 or 5 things: a confluence of indicators, meaning all indicators are doing the same thing, a confirmation of indicators between price and the indicator itself, lining up momentum, trend, and timing, making sure you're taking a trend within a trend trade. Also noticing when you're in and when you're not in consolidation. All of those things become very, very important as you start to trade. They become very, very important. We trade live, but we don't have trades every 10, 15 minutes. That's not what I do. I could trade every 10, 15 minutes, absolutely. But that is a quick way for burnout. That's also a quick way to churn your account. And in the professional world, they call that churning. So that being said, Q, you can line it back up for the next book. And in between times, when there's no dialogue, there's no trades, we have a book going. We don't want to have unnecessary dialogue, but we don't want to hold our question because we're scared to have dialogue either. It just has to be relevant, right? And that's all it boils down to. There's a lot of sitting and waiting and trading. Trading is very boring. So what we're trying to do is bring you a different look and not make it so boring by having the book played in the background, and also by showing you the dialogue that we have as traders building. And that's it. So I'll be quiet now. That's it, Keith.
Can you flush your charts real quick?
Yes, sir. Matter of fact, hold on before you
Yeah, I see the line up.
Yeah, it started. That's what it looked. That's exactly what I was about to say. But all right, here we go. Yeah. So what we're doing now is we're waiting on that pullback on the 900. So let's just, ladies and gentlemen, it's going to be quiet time for right now, because we're waiting on a pullback on the 900, which is our third chart from the right. It needs to go down one more. This is not the trade. If it gives you the arrow up, this is not the trade you want. Even if it takes off on you, you should be okay with this, because it didn't give you a market structure. It gave you a 1 bar pullback. So it needs to get below this low. At 33.50, that's the low of my red bar. That sucks. It just didn't give it to us. I could have told you to enter on the arrow, but it didn't give us a market structure. So because it didn't give us a market structure, it went against my rules of entering trade. And as you can see, it's coming right back down. It might go up, but this is the kind of chart. This is the kind of trade that I don't care about. And when I say that I don't care about, if it goes and it goes 1,000,000 points, it's okay. Because it didn't give me what I wanted to see. What you don't want to do is give you everything you want to see. You don't take a trade, and then that trade goes 1,000,000 points. That's what you don't want. But I appreciate y'all. Y'all have been spot on today for the most part. I mean, spot on. All I had to do was go down one more tick, and it did not. 3 more ticks, actually, but neither here nor there. Heath, do you see? Am I right that this green bar? Did yours give you a market structure, or is it a 1 bar pullback?
It did not give me a market structure. It was nah. I said, no, it did not. My low was 33.25 and it was 34. So I didn't break it.
Right, that's what I figured about 3
1
ticks.
bar pullback.
Wow, really? We're going to be here for a second, ladies and gentlemen, to give it a shot here to see if it breaks this low and then gives us an arrow back up. Come on. Did it break it? I can't tell. Hold on a second.
Yeah.
All right, so it did break, right? So now, if it gives us an arrow up, we're going to take that trade, ladies and gentlemen. Ronald, you'll be one. When you're going to be one on this, Quinn, because it is counter trend. And then we'll add as it proves to us that it's going to do what we needed to do. Okay. We don't want to be too risky because it's right near the top. It doesn't give us much room. If it prints, you're in.
Okay. In at 42.50.
Me too.
Good, good. Okay, huh? Out. But they broke that high and then it's coming back out. Out, everybody out.
Out.
I'm up. Oh,
How many points? Give me the point total.
7.
7. What are you up? 20.
6 1/4.
6 1/4. Okay, that's fine. That's 13 points, ladies and gentlemen, in a matter of seconds there. We did take this trade. I didn't want to add to it or anything like that, simply because on this particular trade, we're nearing you can't see it. So I'll expand it and explain it to you here. You can't see this, but you have a situation where you're running into these highs. And let me erase all of this stuff so you can see, because I do look at price. You do have these highs right here. And it's a downtrending day. Now, this is an ABC pattern to go up. It is, no doubt about it. It is an ABC pattern to go up. But we typically haven't gotten into the habit of holding trades past, a large drawdown or whatever the case is. So we'd rather take our money and look for our next opportunity. Let me stop here for a second. That was a nice one, but it wasn't as nice as it could have been, right? It wasn't as nice as it could have been. but I'm not willing to give up those profits because it ran very, very quickly to the upside. That being said, ladies and gentlemen, this is why I tell you, if you wait on everything that you want to see, you're going to put the probabilities in your favor that you're able to make a profit on the trade every single time. I'm not saying you're going to win every single time. I'm saying you're giving yourself a high probability of winning every time. This is the difference between gambling and trading. Trading is a skill that's developed over time, where you recognize high probability setups or trades where you can thereby extract money from the market. Those who are smart understand that you cannot move the market by yourself. You need others to help. So the best thing to do is to get on a train that's already going in that direction. And when it comes to a stop, you get on and you go in the direction it is going. It is literally that simple. But most people cannot do that. Why? Because they're antsy about trading and not realizing that you have to develop the skill first. Now, with that said, I'm gonna prove to you why I thought that was a good idea to get out of that trade. I told you it ran to the highs. This is something that I can't teach on YouTube. This is something that I can't teach in 5 minutes. That thing had what we call capitulation volume, which basically means that thing ran in a matter of seconds to a point and then paused. 99% of the time when that happens, it's coming back. Had we stayed in that trade, would it have stopped us out? Yes or no from our entry point? Gentlemen.
Say that again.
It would have stopped us out, right?
Yeah, it would have stopped you out. So you would have went from being in profit to being stopped out instead of taking your profit and now waiting to see what else is going on, right? So what we're going to do is we're going to chill. Nothing to do right now, just chill. And we'll come back to it here in just a little bit, okay? So I'm going to go back on mute. You won't hear from me too much more today.
Before you go on mute, I got a question about what you just said. I'm just trying to put together everything I heard. Didn't you say earlier that trade was kind of trend?
No, I did not. I said it's counter trend to the day because the day is down.
Okay, I didn't hear counter trend then. Okay, all right. Because my question was, will we be looking to hold trades if it's counter trend? But it's still a question. If it's counter trend to the day versus the overall market, is that still an opportunity to look to hold, or are you just looking to hold when?
No. If it's counter trend to the day and everything is lining up the way it's supposed to, and it's a trend within a trend on your intraday charts, you can hold that trade. But what you can't do is, when we got into this trade, right? This is the third move to the upside.
Yes.
This is the third move to the upside after the second ABC pattern. So you not only did you take the third move, right, on the 8100, you took the second ABC pattern. So you took the second ABC pattern and the third move, which is one of the reasons why I didn't hold it. I didn't want to get into that because it's hard for me to explain without sitting with someone and saying, this is how you count moves and this is why this is a move and all that kind of stuff. But again, if you want to know what we trade and how we trade, ladies and gentlemen, this is just for the general audience. Please go and look at that playlist. I'm telling you that's worth plenty of money if you learn that by itself. If you just look at my playlist, I tell you everything. I break down the market, and I tell you exactly how it's supposed to look, and I tell you exactly what the look's supposed to look like at the end in order to trade. We'll take a look at that. And I talk about the ABC, the 4 reasons to take a trade. I talk about the 7 things the market can do. I talk about the 4 types of reversals, and then I talk about putting it all together. Okay. And see, this trade worked for more money, right? But it's better to get out of it. I was talking, so forgive me, but I was talking. But you could have entered that trade again at 40, and then went again at 42. That's how I would have done that. I wouldn't have given up all of my profits on that trade. I'll just re-enter it. Now, to be honest with you, I was talking, so I didn't get the trade. But and let's see if everything's lined up when they give it to you. Yeah, everything's lined up. So everything's lined up, but see here, hold on. There we go. So everything's lined up for that second entry. So you could have taken that second entry and then had book profits. Does that make sense what I'm saying?
Yes.
So you always, when you have to recognize those kinds of things, that's where my skill comes in, because I'm able to tell you why something is the way that it is, not just it is. So again, I'm going to go on mute, let you guys have your dialogue, and please turn the cue the book back up, Q, and we'll look for the next opportunity. Are there any other questions before I go?
Nope.
All right, cool. Well, I'm out. I'm here. And so if you need me, I'm here. But I'm just I'm in observation mode today.
House audio.
That's look like that might be. We're waiting for a market structure pullback. You had a 1 bar pullback, a poke bar on the 900. But
No, you're right. I do see a strong move to the upside. Looking at the 900, the market structure is forming. We probably, I don't know. We looking at the 300, we could have really
no,
could
it's
have
been
taken that.
market structure first. We haven't had a full a 2 bar pullback on the 900 at all. It's just been going straight up with 1 bar pullbacks, and but, mm, but he's about to get the setup. He said play it because he thought it was gonna take us. I don't think. It's been going up since 11:45. Let's say that's when it crossed up. So it's been going up for about 15 minutes almost without a pullback. I see one small market structure, but on mine, it's not on his. But that was early on and it wasn't lined up yet. So that one wouldn't count it. But that was a move. And fortunately, we still just waiting for the pullback to happen. But I don't see what chart is that.
900.
Okay. ABC pattern. That's it.
We just need a proper
I mean, that was a trade maybe on the 900. So 2400, 20, everything else must have been up.
we just I need a proper market structure on the 900. And can you flush the 300?
He changed it. He put in 24,000 up, I think. I think he trying to show us it was a trade on the 900 entry.
I think it's up below.
Yeah, so that's an ABC pattern on the 900. And he just got you. Yeah, it's not lining up.
It's not flush. Chart's not flush.
Mm, mm, mm. Once you got the 8100 short-term momentum flickering, it just closed red. 2700 is down. 900 is down. So the entire move was on another time frame. I think that's what he's trying to show, that that move was an entry on the 900 chart, but we don't see the 24,000 chart.
Yeah, our focus is the taking it on the 300 though.
But what were you gonna take it at? It didn't line up for the 300.
I mean, I'm saying we if it didn't give us to us to take it on the 300, I mean, why we even talking about taking it on the 900? But I get what you're saying though.
Yeah, he was trying to show it was a trade on another time frame because it made such a move up and didn't give us an entry. He's just saying that was a trade on another time frame.
Here, I need to take this call. Hold on one second.
All right.
Excellent observation, Keith. Because that's exactly what I wasn't gonna say anything, but I gotta come in and chime in on it, right? You gotta be able to get proficient looking at one set of time frames first before you start going up and down. That's for anybody. That me, anybody. It doesn't matter who it is. And you definitely shouldn't be trading on these smaller time frames in this kind of volatile market. You'll be mad as all get out on your entries. Ladies and gentlemen, I'm gonna sit up here and tell you in no uncertain terms. Listen to what I'm about to say to you. Wait on what you want to see. Point blank, period. Right? This big move up here. If you didn't get that original, Ronald, are you here by the way?
Yes, I'm here. I'm over here. Feed my baby.
Oh, look here, man. I know you. I understand what the situation is. So watch this. All right. This was the only trade to the upside that could have been taken. If you didn't get this one, there was no way. It was a done dollar, as they say. It was a done dollar.
Was you talking about that one that we was discussing earlier?
Yeah, that one at 1105. If you didn't get that one at 1105,
Yeah.
I mean that was your best shot of getting the trade. There ain't no other way to put it. Right? I mean, there's no other way to put it. So but I think that this thing breaks down right here. Because what I was also trying to show Keith, and nobody saw it because I put it up and took it away quickly. But I'm gonna see if you can tell me now why this should give you extreme reason for pause to the upside.
I apologize, Jess. I had to take that call.
Oh, you good, man. You good. What do you have right now, Keith, potentially? It just depends on how the bar forms. But if it closes in 13,000 bars,
13.
do you see what it is? It's obvious as all get out, but
Yeah, it's divergence.
on a 24,000 chart, that's tough. That right there is tough, my friends.
I do see that.
Yeah, this right here is tough. I mean, and watch this. Never seen me do that one before, have you?
It's been first.
In 3 years that Keith been with me, I probably ain't never seen me do that. Because that's the first time I've seen. I've heard of double divergence, but not like that. So we gotta wait and see. I mean, bottom line is, if this thing doesn't go down, it's going to go up another 100 points.
Okay.
So we'll get
Yeah.
If this divergence doesn't happen, that means they're going to that means the book is clear, and they're going to start pushing this thing to the upside tremendously. So stay tuned for that in these next 12,000 bars. You don't know what it's going to do. However, on the 8100, it looks like a clue, but I'm not guaranteeing it's no clue. It don't even matter what I think now, because in the time that they took for this thing to load, it pushed up 8 points. If it breaks that high, things in trouble. Not trouble. It's gonna go up. The Bears are in trouble. The Bulls have put their horns in the Bears' side and running with it down the street. That's what it looks like. It looks heinous. Because if it breaks this high, it's going to be a wrap. I'm gonna teach something real quick. You've heard me say this before, but I've never gone in this amount of minute detail. But I'm going to show you how you can always recognize it, what's going to happen. And I want to use a small time frame. Excuse me. I want to use a smaller time frame because you have it moves a little bit differently. Let me unhide that. Because we don't have anything right now that I see. Correct me if I'm wrong, please. But I don't see, we just now have an alignment on that 2700. So let me show y'all how this works, right? You see this 2B? I'm not going to draw it. I'm just going to show it to you and then I'll draw it. You see this ABC pattern here?
Mm-hmm.
Then you see it get above this ABC pattern right here, right? If price closes above this high, the next pullback is probably going to go up pretty a good bit. So like right here, even though it's not a market structure, there's one more pullback, it's probably going to go up. Remember at 825, I said if it doesn't go down, it's going to go up, and it's going to go up 100 points. This thing might see 900 today. So this is the same thing here. It goes up and breaks this high. This next pullback, this is the one. This is the trend move that's happening right there. That's it right there. Like, so now I'm going to draw it for you. I was talking that talk. Now let me walk that walk. So low, high, higher high. This pullback is the entry to go up. Gives you the ABC pattern. I don't want the ABC pattern because I don't want the ABC pattern on 900. Okay, cool. Gotcha. So then we're going to do the same thing again. Right? I can show you this I can show you this every time. Every time. And this is what I'm trying to get you to see when I see just when you get to read price. Low. High. Higher high. Pullback. Pullback. Right? This happens all the time. Like when I say all the time, I mean all the time. I can show you again here. Hold on, I'm trying to get my cursor over there. You remember Keith? You remember Malik used to talk about that 3 wise man pattern?
Yeah.
He'll never draw it like that because that's how I taught him. But that's the 3 wise man pattern.
Oh.
He's only going to take that trade there.
Go back to the right, please. Okay. All right.
And he's only going to take that trade there. So he's only taking these 2 trades right here. If that's an inside bar, I can't tell if it's not or not. If it is or not. But if it's an inside bar market structure, he's going to take that trade. I think he erased that. I didn't even do that. He's going to take this trade here. And I'm just showing you what the 3 wise man pattern looks like, Keith. So you see what, because I know when he said it to people, people were like, huh? He made it confusing on purpose because it's just that simple. It's just this simple right here, right? And this works on any time frame. It doesn't matter the time frame, because I'm going to show you the short that happened earlier that was a 3 wise man pattern. I think this is the 900 I got up. Yep, 3 wise man pattern happened on the 300, if I'm not mistaken. This was the 3 wise man pattern on the 300, but I'll show it to you. Let me see if I can get these highs. So again, I'll prove it to you. Got a low. Then you have a high. Then you have a higher high. It pulled back. And off she went. It does that all the time. I mean, you don't need an indicator first to see that, but I'm trying to get y'all to now understand the fluidity of the market. Understand how fluid the market is. So now that I've shown you that, let me show you something. I didn't say anything because now that you guys are starting the dialogue, I know that you know what you're looking for. I heard it. Right? Ronald hasn't put together the entire sequence yet, but y'all understand the sequence and understand what it's supposed to look like. But you got to make sure you stay on task. You got to make sure that you stay on point. You got to make sure that you stay with the flow of the market. That's where the price flow analysis comes from. This, what I just showed you, is price flow analysis. Low, high, higher high, pullback, enter the trade. That's it. Every time. Let me show you what happened on the 8100 so you can see what I'm talking about. It's gonna blow you. I mean, because what happens is I want to make sure I peel back the onion so that you don't get too bogged down in the weeds, and so that you understand exactly what you're looking at. Forget the indicators for the second, because the indicators are there just to confirm. That's all they're there for. But if you look, you got a low. Hold on a second. Let me make sure I ain't lying to you. Hold on. See, make a low. And I think I did it wrong on the other one. This is a high. Well, then this make a higher high, and it pulled back. And what did it do?
Took off.
It took off. Well, this made a higher low first. That's why it looks funky, because it's a back door. It's not. This is not a lower low. So, but yeah, you have a low, a high, a higher low. Trend takes off, and if you want to do this one right here, it broke above here, and then it pulled back, and then it took off to the upside.
You just say a high, so it don't have to be a higher high. It's just a low.
No, it's the first one is a high because it has to break it, right? So let's just look at it. This right here, let's just say this is the high for a second. So you have a low, a high, then you have a higher high. You see it?
Yeah. Right. It was confusing because you're not saying lower high, you're just saying a high. So
Right, I'm telling you where the three highs come from. Because if you're looking for a long, you're looking for three highs.
yeah, okay.
But it's naturally going to be a higher low.
Yeah.
So you got this high, this higher high, then you got this higher low right there. Now, if you didn't want to use that, you could have waited till it broke, and it broke it right there, and then it pulled back again, and then it went on. But my point is, be very, very aware of that, right? When you're looking at a trade, look for that on the 900 in the midst of your stuff. You see what I'm talking about this? Am I lying? Is this thing at 19 and a quarter? Oh, wow. So let's see what the 24,300 looks like. That was that V bottom. So now you have a low, a high, Now you have this higher high that happened here. And then it might be divergence come down though, guys, real talk. Because I told you that divergence was happening. And then when this thing started taking off to the upside, that's why you had such a big move. That's the only reason why you had such a big move. Because of that. Does that make sense what I'm saying? Like you had the same thing I just showed. You got a low, high, higher high, pullback in the trade. The higher lows are there. You know, you got this one bar pullback because there's still one bar pullbacks. Right?
And how you enter the trade just depends on your philosophy.
Right. That's the philosophy that I use is I make sure all my 4 charts are lined up because that's actually what you're reading. I just don't say that out loud. You know what I'm saying? When I tell you all the things have to be lined up, that's what you're reading. And that's why you don't get trades all the time because that trade has to line up on all charts. Because if it doesn't line up on all charts, that thing goes against you, you can lose. Psychologically speaking, that's a tough pill to swallow. Right? It's just a tough pill to speak. It's a tough pill to swallow when you're right about the direction, but you're wrong about your timing. And people say, you know, certain people say that you can't time the market. I'll just leave it like this. There are a lot of people who made billions of dollars timing the market. My mentor being one of them. And as a matter of fact, you ain't got to believe nothing I say, Q. You ain't got nothing to believe nothing I say, Ronald. I'm going to make a statement and Q can verify or tell y'all I'm lying. I have called every major market turn in the market ever since I've been in the chapter. I told them exactly what it's going to turn and exactly what it's going to turn again as far as getting in and out of their long-term investments. Call me a lie, Keith.
Don't you?
I'm not saying that I have a piece of knowledge that you can't know because I'm so smart. I'm actually just a regular guy. I just know what this stuff looks like. Right? I just know what it looks like. I listen to how eloquent y'all sound on the thing. That's not me. Right? You know, when you get on there, he sound like he about to do a Toastmasters speech. You know what I mean? I'm like, that's definitely not me. I mean, that's not my purview.
What you saying? What you saying? What you saying?
I'm saying that when you get on here, you start talking, you sound like you're about to do a Toastmaster speech. You sound so professional. You know, I get on here and start talking, boy. People sometimes might look at me and be like, "That dude jackwig." Because even on my videos, my wife, you know what my wife said to me? She said, "Will, that hat kind of tilted. Straighten that hat up on your head before you put that video up." I said, "That ain't me. Have you ever seen me walk around with a straight hat on? Ever?" I'm talking to my wife. Have you ever seen me? No, but I mean for the video, you need no, because then I'm pretending to be something I'm not. Can't do that. Because if people don't like me, then cool, so be it. Don't like me. And I'm cool with it. If you like me, cool, so be it. I'm cool with it. But yeah, I gotta be me though. You gotta like me. You know, you can't like my representative because I fired that joke a long time ago. I had a representative, guys. This is just a sidebar conversation joke. I had a representative back in the day. That joker boy could smooth talking, you know, alligator boot wearing, you know, airplane flying, private jet flying, all that. Just, I mean, that just ain't me though. I was like, that ain't me. But I wanted to, you know, I wanted to be like the people in the industry. You know what I mean? I wanted to do the stuff that the people in the industry did. I was just like, you know what? I'm just gonna be me. I'm just gonna be me. And that's what I try to get people to understand as far as these markets are concerned. People have different personalities, and that's okay. The only thing you gotta do is just know how to read it. Because once you know how to read it, then you know exactly what to do. Now let me give you a prime example. Because this is the 300, it's gonna show up on the 300. I'm gonna erase everything and prove it to you all over again. I'll prove it to you all over again. Because the market can't do anything but this. These are what you call market structures. When you hear me talk about market structures, Exactly what I'm talking about. And this is how I'm able to consistently stay profitable. You see, this is a high, this is a low. This is a lower low. If it goes up and doesn't get above those highs, chances are she's going down. Right? I mean, I'm gonna prove it to you now. This is a low. We're gonna watch it in real time like this. This is a low. This is a high. We don't know where it's gonna end up. Once it gives you a market structure, you know this is gonna be that's gonna be the high. It could be a 1 bar market. It could be a 1 bar pullback, but we know for a fact that the high is at least right there.
So after you get the higher high, you can get a 1 bar pullback to go back up.
It could give you a 1 bar pullback, but what you really want to see is you really want to see a market structure. That's why I tell people don't do the 1 bar pullback, because you can get caught in that funk.
What chart is this again?
Huh?
Man, my dome is covering up the chart number 300.
So if this thing comes down, like it's giving you a market structure, so that's definitely a high right there now, right?
This is a double bottom.
It might be a double bottom key, because again, I'm far away from the computer.
But you know what mine
Is yours a double bottom?
is? 2275. 2275. Wow. Yep. Double bottom. Oh, mine is a double bottom.
Yeah, I mean, it's pretty sure it's mine. Even if it goes by a tick, it's still real close. This thing should go up though.
Hey, that just looks like an ABC pattern to go down.
It does look like ABC pattern. As a matter of fact, it could be an ABC pattern. Once you got your A, B, and C right here potentially.
But if they go up, then like I said, the reversal didn't work, then it should be.
But I mean, it should go. This should go up because it closed above. That's tough.
The higher high. Yeah, higher.
That's why you need them other time frames, because
Yeah.
you looking at this time frame, then you have to be aware that this could be an ABC pattern, but and that's why you bring again. That's why I have all of my.
The ABC, once it broke the high, and made like the ABC pattern was on that first on the initial high when it made that market structure down and went back up.
But this is still part of this initial, because if you this is the thing, if you enter on an ABC
Oh,
pattern,
because it's double bottom. That's right.
yeah. But it's if you enter on ABC pattern, your real stop is right there. So that's why you can take this trade thinking, okay, it's gonna go to some degree up here, and that's why I get my 1-to-1, talking about on 1-to-1 and all this other kind of stuff. That's where I get all that from. And if y'all notice, I let the YouTube channel go a lot further than our trade, simply because I want people to start seeing and getting value in the dialogue we have, and also seeing everything that we have going on. Because I've had a lot of people, when I say a lot, I mean like a lot of people that have been private messaging me and sending me requests for the book and all that kind of stuff. So I try to get online to uh, allow people to get on. And you guys check the messages here in a minute. And that's my reason why. You know, I want people to have value. I want them to know, okay, cool. They just not no guys out here just sitting up here telling everybody that, hey, I'm doing X, Y, and Z. And they don't have any value from it. Not what I'm trying to do. So this is why the 918 works sometimes and sometimes it doesn't, right? Because you have, again, because if you don't line it up with other stuff, trading on one time frame, unless their time frame is very, very big.
So he's saying about, so I guess this depends on the volume, but what size time frames should you be considering on now? Nothing lower than 900, maybe?
I wouldn't do that on nothing lower than the 900, period. Ever. Because the 900 is literally like a 30-second chart. If you look at it when it's moving, it's going to be anywhere from 25 to 45 seconds probably, right? And you see this thing is still moving up because the trend is up on 300, but it's not up on the 900. That's where I get my trend within trend commentary from. When I tell you if everything's not aligned, I'm not looking to take the trade. So let me show you this, because I think this happened earlier. It did happen earlier. And it's easy to see, right? You have a low. Then you have a lower low.
Where you at?
On a 900, where I had a white line.
All right.
You have a lower low right here. You have a low right here.
Mm-hmm.
So you have those three lows, right? And then it pulls back and it goes. And see, this is what's happening. They're fighting because there's some buyers came in there and they're fighting it. But this is why I tell you don't get in these kind of trades, because you don't know who's going to win. You could be right to the upside. You could be right to the downside. This is the pullback I was looking for, though, on the 8100. Being real about it. Remember I said I wanted the market structure pullback?
Uh-huh.
Look at what you have now. You have a market structure pullback. Now you're just waiting for everything else to line back up, to go back up.
Can you go back to that 900 chart again? I want to look at that wide, 3 wide pattern. I had a question about it.
Or you want to go back to?
Because I saw you say you had a low, then you had a lower low. But the lines didn't seem to match up, but it moved quickly. So right there, where's the low at? Which is it, the green bar or the red bar? You had a lower low, you had a low, which was a lower low, then you had an even lower low.
So now hold on, because I got it over two things I was looking at. Okay, so you got one low right here.
Yeah.
And then the previous low was right here. Hold on a second, man. It just froze on 1 second. Hold on. So you got a low, but this made a higher high. Don't look like it, but it made a higher high right here. So let me make sure I'm not lying to you. It did. You can see that, right? So I made a low. Had a low right here that it broke. So you got the high, you got a low, a lower low, and then it pulled back. You see that? Has the high.
Just to go long or short.
This is go short. You got a high right here.
Okay, all right.
You got a low, and then you had a lower low, and then you had a lower high to follow it.
Okay, so the high was that.
Highest point.
You
Right
started
here.
right there. Okay, so if that's the high, and then you had a low.
See, this is the thing this is what I'm trying to teach you. You don't go to this low. This is not the first low. Hold on a second. Right here, this is not the first low. This is the first low. Why is this the first low?
This is the
Because
first
this is
low.
the higher low that made it. Okay, I'm
I
sorry.
can't see
I
you.
thought you
I
were.
can't see your scroll. I can't see your mouse is black.
Hold on a second. I'm gonna show it to you because I get to doing that. You know, I move fast. So this is your first low.
Okay.
That's your lower low.
Because I was a high originally, and that made a
So you went from a higher high,
market,
huh?
mark
You
the
went
higher high.
from a higher high right there. That higher high right there.
Mm-hmm.
Then it went. This is the low. So once this higher high, then gets below this lower, gets below this low, it becomes a lower low, right?
How can the low be after the higher high? The low looks like the low is before the higher high.
Right. So what I'm telling you is this is the whole point. This is what. So I'm glad we're having this discussion because this is a detail that I gave other people that I share that if you're not with me, you don't see this. This low right here, nobody ever counts, but you should. Why? Because it's the higher low that caused the higher high. So if it takes this bar, if it takes this out, it is probably no longer valid. Does that make sense? This higher low right here that I'm looking at, where I have the first box drawn to the left, that higher low gets taken out. Now we have what? A lower low.
Lower low.
Because this low here, all you're doing is going sequential. All you're doing is going sequential. This low here is lower than the low previous to it, right or wrong.
I understand that, yeah. But
And
the way you
then
said, yeah, okay. The
this
way I
high,
took it, yeah, okay, keep on.
this high here is lower than this previous high here. The
Mm-hmm.
trade that you want to take is this trade right here a lot of times. And then if you go to the next month time frame to get your entry, that has nothing to do with no indicators lining up or nothing like that. I'm telling you price structure, right? If you have this low here, what time is it? 12:35. Okay. If you have this low here, and then you get another lower low, so now you have a low, lower low, lower high, right? And then so now you have a lower low, lower high. I'm taking this trade right here. The reason why I'm taking this trade right here is because a lot of people are going to take this third move to the downside. A lot of times it's not going to work. And the reason why is because if it becomes an ABC, because guess what this became? This became an ABC pattern, right?
Mm-hmm.
Looking to take this trade because it's an ABC pattern for a higher low on your large time frame. This is the part. I'm trying to connect the dots for y'all now, because now you need to understand, why am I taking this trade? What kind of trade is this that I'm taking that's on a larger time frame? Okay. If it works, what is it going to become? Is this a trend trade? Yeah, it's in a trend, but this is a short-term trend right here. And the short-term trend is nothing more than a A, B, C pattern. So I said this to Quentin the other day. I said, you're trading the B portion back down to get the C, and then you want to be out of trade. Now, the reason why y'all have to wait for everything to line up is because I know you don't see that clearly. But if you wait on this right here, you don't have an ABC pattern. What you have is a straight trend. So now the same thing applies. It goes from a low,
Well, yeah,
what the bottom white line is,
bottom white line.
on the 900.
All right.
Got a low, then you got this high right here. You see that? That high where I have that bottom red line drawn.
Okay, we're looking at your black mouse cursor.
No, I'm just saying, look at the black line, the black horizontal line that's touching the vertical line on the 900. You see that? You don't see it.
You know, it's got a black background, right?
Right, but it's a red line. You don't see the red
You
line on
just
the
said
black.
the black horizontal line.
Okay, what I'm saying is, I'm sorry, the
There you go.
horizontal, the red horizontal line that's touching the vertical line.
I got you.
So you see that? That's that one right there. So that's a high, right? So now if it breaks that high, this is where the white line at the very top is, right?
Mm-hmm.
So now when I get my market structure, I know for a fact she's going up. And it lines up on everything on every other chart. It lines up with everything on every other chart. So I shouldn't lose on that trade. The trade that we took, we didn't have any, those are the only two trades we had today. We didn't have any other trades, even though the thing, you had to continue to add on or re-enter or whatever the case is, but we didn't have any other trades once that one happened. So we only had those two trades that was our setup.
The sequence for that trade was the white lines.
Yes, the sequence of the trades was the white and the red lines.
Mm-hmm.
I'll show you what I'm talking about. The sequence for the
I
trade.
thought you were showing us something to go short, but the short didn't work.
The short did work. It just was an ABC pattern. Once it breaks that low, I'm looking to get out. That's why you would hear me say, see, watch this. Wrong, are you here?
Yes, I'm here.
You remember them times you'll be like, man, you got it right at the top. If it did turn right there. You remember that? Remember them conversations?
Yeah. A few times, quite a few times.
Right, because I know for a fact that I'm trading the ABC pattern in the move. You see, because right here, I would have been getting out right there. But that thing broke that bottom, I would have been getting out. And whew, it went right back up. So now I'm giving you the reasons why. You get what I'm saying? Now I'm showing you the why behind everything, not just saying this is what happened. Because the reason why I'll get out of a trade like that is when it breaks this bottom, I'm out of there. Because I know for a fact it's an ABC pattern. I know for a fact it's an ABC pattern. And that's what I'll do. Now on a trade like this, and you'll see me say, I want to hold it and see what's going on. Because I got everything lined up in my favor. I can give this a little room. If you get into a trade like this.
The ABC pattern, which I see the ABC pattern, at least I believe. I'm looking at, that's that red line, and then the bottom line, it broke the low window and took off.
Yeah, I'll draw for you. You see it, right? I mean, I know you see it.
Yeah. But like I said, I think it's two different things going on. So I just want to make sure I'm looking at the right one. That's your ABC pattern to go back up.
Right.
Yeah. What's the three wise man pattern? Where is the three wise man pattern on that?
The three wise men pattern.
High. Higher high.
You see this low right here? So you got this high low, and then this high right here. And the three wise men pattern is going to be this third low in a trend. In a counter trend, the three wise men pattern is zigzag. The three wise men pattern becomes the ABC pattern. This is how you stay on. This is how I taught other people to stay on track. So you got this high, this low, and this lower high right here, right? So because you got 1, 2, 3. The next move should happen down there. The three wise men pattern in the trend, that's counter trend to the overall market. The three wise men pattern in the trend is low, high, higher, low.
Or a high, low, lower low.
Right, correct.
That's in the trend. Three wise man pattern and the counter trend is an ABC pattern.
It's an ABC pattern, right? And the third wise man is the B. I told y'all that thing was going up, but the thing is, watch this. Ain't nothing we can do about it right now. We gotta wait on it. Again, I'll show it to you, prove to you again, so you can see what I'm talking about. It's happening right now. You got a low. Now you got this was the high. So now you got a higher high. When this thing pulls back, gives you the trade, that's the trade we want to take. I am trying to stay for that particular trade though, by the way. I am trying to stay for that trade. So now you get to understand why the things, okay, we know red, green, green, red. I got all that. Why? You know where I'm coming from? Get the answer. I get that. But why? Why? Why we doing it like that? All right. Always ask yourself that question. Why? I'll show you some. Why, Will? I'll show you something. Why, Will? I'll show you something. Why, Proper Stalker?
So
Wow.
I'm the 2-year-old who just received a gift of a tomahawk ribeye. I'm gonna put that thing in the freezer for a little bit till I'm ready to chew on it.
You ain't ready for that yet. You ain't ready for the why question. Like, don't tell me why. Don't tell me why yet. I don't want to know.
I'm keeping it real. You know, you have to know where you're at.
Watch this. Watch this. You ready, Quinn? I got a whole one word response for you. You ready?
What?
Respect.
Yeah.
I get where you're coming from. I'm just trying to get you to understand over time. Put it back, put it in the freezer, right? I'm trying to get you to understand. Once you understand that part, then you're on your way to being a professional that can teach people unequivocally, right? And when I say teach people unequivocally, because when somebody else asks you why, you're gonna have to answer that question.
Right.
You know what I mean? It's because I'll say it this way. When people in the past have taken what I taught them and didn't really understand what I was doing, and they try to teach others or create their own business out of it, there had to be a lot more teaching on the side in order for them to grasp it. And what I'm talking about is you can go to this website right now, Nick's 2B strategy. Because it's counterintuitive information, number one. Meaning that trading is not like being a doctor, a lawyer, mechanic, teacher, lawyer, whatever, rapper, entertainer, actor, actress, whatever. It's not like that. It's counterintuitive. Completely counterintuitive. Because it forces you to face yourself. You want to learn a lot about you, become a trader. You're going to find out a lot about you. I mean, there ain't no other way for me to put that. You're going to find out a lot about you as a person. You become a trader.
All right, I'm gonna screenshot that then.
Oh, you should have.
Anyway.
Huh?
I'm gonna try to though. I'm gonna try to anyway. What I'm curious about, because I saw you said that ABC pattern was just a pullback, was a higher low on the 8100. So when you're looking at all of this stuff, a pullback on the larger time frame is an ABC pattern somewhere, right?
Correct. Absolutely correct. That is 100% the right there. Now, Quentin, this is something that you can sink the teeth into this one. This right here is good stuff. An ABC pattern is nothing more than a complicated market structure. That's all it is. And it's complicated because it has more than one leg. That's it. Because in order for an ABC pattern to be an ABC pattern, you have to have a higher high, lower low, correct?
Yes.
And when I show people just the ABC pattern chart, they call me a counter trend trader. Not realizing that I'm looking at something on a larger time frame to actually go with the overall trend. Does that make sense?
Yeah.
Like right here, right now, is that a market structure? It's a market structure on the 900, isn't it?
I think you need one more low. That's
You,
you got an engulfing bar. You got an outside bar.
huh?
You got three. Yeah.
You got that green bar that made a lower low. And then that other
It
bar
made
that
a higher high low. Then the red bar made a higher high lower high.
a higher high and a higher low, right?
Yeah, that's what I did. That's what I meant to say.
Yeah. What do you mean? Yeah, I got you. So
But at that point, it starts over, so you need another low, right?
Kind of, but I ain't gonna even lie to you. If this thing, yeah, we gonna wait on the real. This right here, I would be willing to take because I'm sitting up here telling you, if it give you that green arrow, she's probably gonna shoot up. But the other thing is, watch this. Never mind, because all of everything is not lined up. I'm just looking at two charts. So no, it won't be a trade because everything's not lined up. It's a trade
That
on.
wise man pattern, and you want strictly market structures for that? You want a market structure on everything but the test, the retest.
Well, no. The three wise men pattern can be one bar on anything. I'm just saying what my preference is because I really don't like one bar pullbacks, but we've all seen how the one bar pullback sometimes that's all you're gonna get.
So how's the 1 bar pullback different from a poke bar?
It's the same. One bar pullback and a poke bar is the same thing, but a
That's
one bar pullback is not a market structure.
That's what I thought.
So this thing right here is not a trade for the 4 chart system. It's not a trade for the 4 chart system. You gotta wait a minute.
Still got it, though. Good information. Good information.
I mean, I'm just trying to.
That it right there. Did I mark that right? Yeah,
I
low, high, higher high. I guess you can go at higher high right here. Then it came back, but then it broke that low. What happens if it breaks the low?
Then it's off, but you did that wrong. So watch
Oh,
this.
well, I was asking.
Yeah, so go. I see what you did, but go to the high on the bar that's forming now. I mean, I'm sorry, not the bar that's forming now. Go to the highest point, most recent highest point from where we are now, which is probably about 36. It looks like what it is on my chart. You see the height, right? So now you got that low, and then mark that lowest point right there.
Oh, I wasn't like marking that one. I was trying to mark this long to move up. So I was going here.
See,
This is gonna be okay. That's cool. So you got a high, a low, and then if it breaks a low, then
but
a
that
low.
low is in the wrong spot. Your low should be all the way at the bottom.
I'm so confused. All right. I don't know how to just erase one thing. Okay, here we go. There we go.
I told y'all that thing gave you that whatchamacallit, because then you're supposed to mark that high that happened. You had the high mark, you just didn't have the other high mark with it. And you see it's going straight up, just like I told you it would. It's gonna happen every time.
All
It's
right,
just
that's all right. I'm gonna go back and look at the video.
yeah, go back.
I'm gonna do my screenshots, and then that's when I'm gonna practice it. Yeah. I already wrote my note. The low, the high, the pullback in the trade. I'm gonna try to mark it from the screenshot.
And
So
yeah,
right now
see,
it's going up. I see the low, I see a higher high. I see a low, I see a high, which is actually a higher high, but then I see a higher low. Low, high. It broke that high. So if you get the pullback, that's the trade, right?
you just had it on this thing right here, because watch this. You got the low, and you see the high that happened at about 12:19. That highest point. Had it marked, you just had you had 2 or 3 lines there, I think. That mark, that high that's before the lower low, that lower high that's before it. You don't see it?
I think that's why I tried to mark.
Yeah, you did. You were right. I was trying to let you mark it instead of me marking it. So hold on, let me do it.
Yeah, I'll do it again. But I thought you said I had it wrong, so I erased it.
No, what I was saying is you didn't watch this. What I was saying was you had that one, but you didn't have. I didn't see this one. I didn't see both of them marked. Hold on, let me show you what I'm talking about. So you got this low right here, right? That's why it's going up, guys. I just told you. You had a low, high, higher high, pullback. Take the trade.
But let me ask you this question. On the 300 chart, can you flip?
Yeah, hold on. That arrow is the entry. It's just the indicator. Huh?
Let's see what that line up at. What time is that? 12:51.
That's the trade. So let me ask you a question. I'm trying to make all this line up for you guys so you can see it. The reason why I use the moving averages that I use is because it makes it coincide with what I want to see in price action. And then all I have to do is go down to a smaller time frame and look for the ABC pattern. Because you remember the drawing that I showed everybody at least 10 times. That drawing that I showed you when I said this is how we trade. If you understand this, you can make as much money as you want. Then I talk about that ABC pattern move. You enter at the end of a correction and you exit at the end of a trend. Does everybody remember that?
Sort of, kind of.
If you go back and look, it's on all my thumbnails, just about on my lives.
Yeah.
So if you understand that, and this is what I'm trying to get y'all to see, right? This is why I tell everybody about having an understanding about what's going on will give you a much better opportunity to make money, because the market won't be able to fool you, because you're gonna know exactly where it's coming from and where it's going to and why it's doing whatever it's doing. The reason why that trade didn't work is because all it was another ABC pattern. All it was another ABC pattern, which is nothing more than a market structure on a bigger time frame. Remember that market structure I told y'all I was looking for on the 8100 before I got into another trade? Well, that was it. Indicators are going to always lag unless you make them a leading indicator. How do you make a lagging indicator a leading indicator? Does anybody know?
No.
Yeah, enough time frame.
Yeah, I was going to change the time frame.
Wait a minute, hold on. Yeah, y'all poking the bear right here. So that's good. That's real good. Key, what did you say? And I'm going to what you said next point.
You gotta make it into a bigger time frame.
Okay. And what did you say, Quentin?
I said the same, change the time frame.
Both of y'all are right. And if you put them together, it makes it perfect. You got to go to another time frame and a bigger time frame. And then that way, wherever that indicator is going, you go to a smaller time frame and look for entries on that time frame going in that direction. That is exactly how you make a lagging indicator a leading indicator. And that part right there is something that's missed on the community at large, because what they didn't realize that individuals that created these indicators did back in the day in the early 1900s and mid 1900s. George Lane invented the stochastic. And all he was trying to do was be able to find out the momentum on a larger time frame based on A, B, and C, D, E, and F parameters, whatever its parameters were. I don't remember exactly what they were. When you understand why something does what it does, at that point, and only at that point, will you be able to call yourself a professional and be able to make money at will. The only time I get in trouble is when I'm trying to force a round peg into a square hole. Did you get that? You didn't get that, did you?
Yeah, I heard.
So,
and the things that negate that are, number one being, we hadn't had a trade in a while, or we had a trade and we didn't get as many points, so we're trying to round it out before the end of the day, or emotional reasons, ego reasons.
if you take all of that out, right? So let's take Mark Douglas is a
and that's what he was talking about in the book.
Right. He's a genius in what he does. I'm gonna give you a completely different way of looking at it the same way. you're only confident about what you understand. And you've heard me say at least 5 times since I've been doing it live, and all that you do, get an understanding. Have y'all heard me say that?
Oh, yeah.
So when you understand something, you're not afraid of it. It's only at the times you don't understand that you become afraid. And the other times that you're not afraid is when you're oblivious to what the dangers are. So the best way to be a very disciplined trader is to understand, therefore not being ignorant. And then, and only then, act on what you know. That's it. The reason why I tell y'all use those 4 charts is because it makes it almost impossible for you to completely mess up. And you can do it on your own without having me here. The dialogue y'all had this morning was absolutely the best dialogue I could have asked for, because nothing anybody said was completely like, wait, hold on, I can come and explain this because they messing this up. I sat like a fly on the wall, and I was actually very proud. I think I sent the message out to a couple of y'all. I was like, man, that dialogue was ridiculous. So I told y'all that the versions didn't work. I told you I thought it might go up to 900, right? 16,900. This is how people get in trouble, because when you don't see that initial move like that, just imagine if I watch this. So let me go back and say something. If I'm a professional trader and I'm looking at numbers, and this is a time chart, let's say that 900 is a 5-minute time chart, right? Then I can say for 5 minutes it made new highs. Then the next 20 minutes, for 30 minutes it made new highs. The next hour it went down and made a low. So I know exactly what time it made the low. I know exactly what time it made the high. And then for the next 20 minutes it goes up and it breaks that previous high that I had marked before. Then when it comes back down, if it doesn't break that high or low or whatever the case is, what I'm doing is I'm buying the market as it's going up with stops. I'm going to buy stops in. If in fact I don't believe it's going to break the low, I'm going to put my stop at that 816 area, and then as it's coming down against me, I'm going to start buying my amounts. And that's how I'm able to get into the trade and make a bunch of money. That's it. If you learn that process and learn what that process looks like, then eventually you won't need the indicators. I have the indicators up there to give me a visual so that I can see. You see how this thing just taking off? Because there's nobody else in the book to go to the downside. You got nothing but buyers in here now. There's nothing but buyers in here. The book is clear of all shorts. Not all shorts, but it was clear of all major shorts, I think. And remember how I'd say by the time you get a trade, it's too late because it is giving you 1, 2, 3 moves already. Y'all heard me say that before?
Yes.
This is one of them times because it gave you 2 trades before it gave you the entire system trade. So I'm not getting in on the 3rd move. I'm not doing that. I'm gonna wait for a pullback on this 2700, which I should get, right? Because this is another thing I'll explain to you. If you wait for the market momentum to change on one chart, right? So give me the sequence for the momentum. is momentum what and what?
Trend and time.
Right. So if your momentum is going in a direction, right? Then typically what means is on that next lower time frame, the market's going to be in trend, correct? Should be. Is that a true statement or a false statement?
That's true.
Right. So now the pause that I see can be a what? We talked about it a second ago, Quentin. I want to see if you get this one. Can be a what kind of bar?
You said the call.
I said the pause in the market on the next lower time frame. Once the momentum is going up on my larger time frame, can be a what kind of bar? Or what kind of bar pullback?
Poke bar, one bar.
Right.
Inside bar.
Well, no, it's a poke bar, but you're right.
Okay.
Poke bar or one bar pullback, right? Then on
Yeah.
the next smaller time frame, that one bar pullback is going to look like a what? Market
Yeah,
structure.
Yeah, market structure.
Right. And then on your next smaller time frame year, that's going to look like a what? It should look like a what? It might not be exact because we're using a smaller time frame differential, but it should be a what?
ABC pattern.
Right. So all I'm telling you is I'm telling you right now how to trade. And I'm telling you how to trade and look at it. If you go momentum, trend with a poke bar, trend with the market structure, ABC pattern. You're gonna win 99% of the time.
Hey, you got me all excited about this three wise man pattern. Now you just telling me I just need to know the ABC pattern.
No. What I'm saying to you, but that three wise man pattern, you gotta understand when you see that and you look and see what other stuff is doing, you already know what the situation is. Does that make sense what I'm saying?
Yeah. Let's see, ABC pattern is in counter trend, but that's for it's gonna look counter trend on the entry chart.
Yeah, it's gonna look kind of trend on the entry chart, but I'm talking about the ABC pattern that you're talking about this is the market structure I'm talking about on this, and they gave you the three wise man pattern first.
Yeah.
You're gonna 100% of the time that three wise man pattern coming first.
Yeah. We used to talk about that, and I never understood it. Somebody want to explain it. Now that you're trying to explain it, I'm trying to really get a grasp on it, because that seemed to be a big deal.
Oh, I'm telling you right now, if you get that, everybody in this room gonna become elite. Guaranteed. Guaranteed. Because the thing is, you can't, it's not something that you're going to intuitively that's like, oh, okay, that's what that is. You're not gonna do it. Right? It's almost like this right here. Did you know that there are certain animals, not all animals, because that ain't true for all animals, but there are some animals that you got to stand your ground and they will leave you alone 100% of the time?
Yep.
There are some very dangerous animals that if you stand your ground 100% of the time, they're going to leave you alone. 100%. Now, if you don't know what animal that is and you stand your ground against the wrong animal, you're going to have some problems, right? But 100% of the time, again, with certain animals, and I'm going to tell you one. A brown bear. Not a black bear, a brown bear. You stand your ground against a black bear, they're going to try to tear your ass up. But a brown bear, if you stand your ground, you ain't got to believe nothing I say. You can ask anybody who knows stuff about bears. If you stand your ground with a brown bear.
That's nice information to know. I don't plan on being anywhere where I'm gonna be near a brown bear, but okay. But just in case. Notes too. Okay, write that down too.
All jokes aside, what I'm saying is once you know what exactly you're looking at, then you become the dangerous person. Does that make sense what I'm saying? Once you know what you're doing, at that point, you're the person that can be the aggressor.
I'm trying to get this done.
Point blank, period. Once you understand a certain thing, Now you don't have to be in harm's way, is what I'm trying to say to you. You don't have to be in harm's way. Right? You don't have to be in harm because now you know. Like right now, what's happening? See, I'm just gonna show you what I'm saying. We have the verges to go down on the 8100.
Mm-hmm.
Give you another market structure. So the momentum is down now, so there's nothing you can do with that. Right? Nothing you can do with that right now. Because momentum is now down. So you have to wait for it to turn back up.
Oh.
So there's nothing you can do from an indicator standpoint. But from a price standpoint, you have a high, a low, a lower low. Right there.
Okay. Did anybody see it?
So now when this thing comes down, this is not going to be nothing more than the B leg of an ABC pattern. I know for a fact this right here is yes, it's a trend, but it's counter trend to the overall market, and this is nothing more than the B leg of an ABC pattern.
Now, not for me because I get it, but for the people who might be watching on YouTube, you want to mark what you was talking about?
Oh, that's very, very simple. Yes.
You were saying this right here, but I couldn't see which. Okay.
All right. So you have a low. I'm sorry. You have a high. Excuse me. Let me. You have a high, a low, a lower low. If I get into a trade, if I get into a trade for this to come back down, if I was to get into a trade for this to come back down, I'm not. But if I was to get into a trade for this to come back down, this will be my ABC pattern that I'm looking for on my larger time, that I'm looking for on my smaller time frame to go with my larger time frames. So right here, I'd be getting this. I might be getting this trade. I'm not getting into it. I'm just saying if I was getting into it, I'd be getting into it at whatever price I'm gonna get at. Whatever price is going to be. And then as soon as it broke this bottom, I'd be getting out. As soon as, not a millisecond after. And see how it's trying to now make another move back up. It didn't give it to you. So since it didn't give it to you, now you just realize
Why is it over?
it's not over. I'm just saying it didn't give you the trade, come back down, it's continuing to go up right here.
Mm-hmm.
It's not over, but it will be here shortly if it don't stop going up. Because it gave you a market structure to the downside on the 2700. If it gives you a market structure to the upside, that thing is no longer valid. See, you don't even hear me talk about stuff like that. Like, it's no longer valid because that means that market structure didn't work. That market structure to the downside from that high did not work. And I did this, ladies and gentlemen, over the course of now, so to give you valuable content to understand how the markets really move, not just sitting up here taking trades and you're not really understanding what we're doing. If you dissect the trades that the conversations that we have, see right now, that move should be over with. So this thing should not break that low now. So at best, you hear me talk about them all the time. At best, we should get a 1, 2, 3 pattern. We should not get an ABC pattern, because if you get an ABC pattern, that's going to say something. I just don't see the ABC pattern happening though. And if it does, all that means is it's going to become an ABC pattern on your 2700. That's going to be the valid trade. Because think about it, the 8100, now it served like the 900, and your 2700 was served like the 300. This is why I say you got to understand how the sequence goes up and down. But it shouldn't come back. I'm being honest with you. It shouldn't. I'm not saying it won't, but it shouldn't. And if it does, it might drop a little bit. It might drop a little bit. When I say if it comes back, I'm talking about it might go from 53 to 33. And that'll be about it, probably. But do I know that for absolute fact? No, I just follow. And then when I get the sequence I'm looking for, I know I'm right. You ever heard me say that?
Man, it's still a sequence until it break that high, right? Even
No.
though it's a done deal for me because it closed above the closed 3 bars
So
above.
the 2 bars. So let's talk about that, right? I'm giving you all rationale now. So this video here, I'm gonna call this, I unpack the suitcase on this one. This is something you got to listen to all day. And the reason being is because today I'm in the mood. I'm not in the mood to do this every time, but today I'm in the mood and I can do it to give you a lot of information. Why? Can you tell me why I say if it closes above the bar, 2 bars above the magenta moving average, then that thing's probably going up? Does anybody have any idea why I would say that?
On which chart?
On any chart. It doesn't matter the chart. Does anybody have do you have any idea why I would say, you've heard me say this before, if it closes 2 bars up above those moving averages, it's probably going to go up.
Momentum's up.
That's exactly right. Keep momentum on your next larger time frame. It's not giving you a market structure to go in that direction. Point blank, period. That's it. So I'm not talking about indicators for indicators' sake. There's a reason why I say the stuff that I say. Everything I do has a complete, unabridged, black and white reason for it. Now, again, because this is not completed, this is why I tell y'all all the time, you don't want to be playing up in here. And I'll tell you this right now. I set the indicators up to mimic price to the nth degree. So if you look at these charts, on the 300, it's green and barely across. Oh, hold on. I'm not right. It's red and green, which means it might try to go up. On the 900, it's red and green, which means it might try to go down. On the 2700, it's red and red, which means it might try to go down. On the 8100, it's green and red with divergence, which means it might try to go up or down or just consolidate. And this is why I say, when you got a situation like that, what do you do? Ron, don't nobody answer this. Ronald Jones, what do you do in this situation right here? There's one word I'm looking for, and you cannot fail this test. You live.
You wait.
Huh? You damn right. Okay, cool. I'm good. You wait, right? You do nothing, right? I'm cool with the you wait because that's the positive version of you do nothing. So you just wait, right? Because it is not aligned. And this is how people get scathed. They don't realize when the market's making a move. 90% of the time, when I take a trade and we get into it and it works, it's a beautiful thing, isn't it? When I say thing, I'm not even talking about from a profit standpoint. I'm just saying most trades we get out of and not get but maybe 15, 20% of the move, maybe 30% of the move sometimes. But most of the time, if we just hold it for a long time, it'll be on and popping, right? Because everything is lined up. When everything is lined up, it's very difficult for you to lose on the trade. But the first thing I get to get you to do is to see the trade first. And then we can talk about holding it. I'm sitting up here telling you how this stuff works. And I don't care who teaches what. If they're not talking about trends and reversals, run. If they're not talking about support and resistance, run. If they're not talking about, they can be talking about market profile. I think market profile is a beautiful thing. I wouldn't dare teach the masses market profile. I just wouldn't. But market profile is another good one. If you can add all those things together, oh my God, Jesus. And then you got Elliott Wave, you got W.D. Gann, you got the Just Livermore way of doing things. I mean, but all of those ways are derived from the same. Watch this. Who invented the car? Does anybody know who invented the car? Can anybody online tell me who invented the car?
Ford.
Ford invented the car, right?
Yeah.
It's a trick question.
Oh, wait a minute. Hold on. I'm going to ask this question to Google because that's the best way to do this. When was the first car built? Ford built the first car in 1885, 1886. That's when he built it. Now listen to me.
Really?
And hear my when I say this. That car had a gas pedal and a brake. Name a car today that don't have a gas pedal and a brake. That was almost 150 years ago, like 140 some years ago. Name a car today that doesn't have a gas pedal and a brake.
1836.
So my point is, everybody wants to make it seem like there's new information, so the markets aren't what they used to be in the 1900s. How much you want to bet? I can prove it to you. You ready? What are the only three things the market can do?
The only three things?
Listen, when I say the only three ways the market can move, when I say that, the only three ways the market can move.
Up, down, or to the side.
That's it. I don't care about nothing else. The only thing you can do is go up, down, or sideways. Your ability to recognize that is based on the skill that you build. Period. It is. You got people out here touting they the best person in the world to trade. They can do this. They got this indicator. They got AI working for them. They did it. Let me tell you something. Real traders are like football players. You don't never see them out in public. Tell me the last time you seen a professional gang up. Now I ain't saying a one. And I'm not talking about a retired football player. I'm talking about one that's playing football. Tell me when you just see them walking down the street randomly. We live in Atlanta. The Atlanta Falcons ain't playing no more football. They done. They're done. You're not going to see football players out randomly. You know why? Does anybody know the answer to that?
No, why?
Because they're professionals, and what professionals are doing. Most professionals are trying to work on their craft because they realize that there's another group of young guys coming up, so they got to stay on top of their game. So they probably grinding somewhere. The real ones probably grinding somewhere or resting. So if you're not trying to learn this from a skill perspective on a day-to-day basis, and you out in these streets having a great time, it ain't gonna work for you. I'm gonna give you the rules that I gave Lee. I'm gonna give them to you. If you get a girl pregnant, we done. Because your focus is gonna be different. You ain't gonna be able to focus the way you ain't focused. If you don't do what I tell you, we done. If you don't send me 10 screenshots a day, you are able to miss 3 days a month. You can miss 10% of the days in a month, and in February you can only miss 2. And then we jokingly said, hey, but it's got 2.8. I'm not rounding up to 3. Nope, I round down. So you can only miss 2 days in February. And you got to do everything I tell you to do every single time. Without question, without fail. You never saw Malik in the streets. You saw him leak in that basement at 2 o'clock in the morning looking at charts. He and Colin, be it they grew up in the house together or whatever the case is. I told you about the time I almost shot my own kid. Does anybody know that story?
Yeah.
I don't think it does.
Told me about it.
Do you remember that? You remember that? Did I tell you about that, Quinn?
No, you haven't.
Did I tell you about that, Ronald?
Nah.
So me and Edra stay asleep, whatever, everybody chilling, either and the other. And Colin then hit a ball off the tee and hit the wall, and it sounded like a gunshot, right? So I jump up out the bed and run down to the basement, and this joker downstairs practicing. Hit the ball off the tee. And it missed the thing. And I mean, the hole's still there. I told him, we're going to keep this because you're going to pay for this with your earnings you get when you go pro. Ain't nobody paying for this. You're going to pay for this when you get your money. That hole's still there. I mean, it's a gargantuan hole too. And he didn't get in any trouble because I was like, ain't nobody doing that. You keep doing that right there, you're going to be a different breed of cat.
I'm gonna make them pay for it though.
No, I mean, hey, I'm joking.
Yeah, I ain't mad at you.
But
Your papa get in bed and still broke the rules, so you gotta pay somehow.
I mean,
I got a question for you. I've been hesitant to bring this up because I feel like it's one of them ones where you're gonna be like, you probably want to cuss me out, but you ain't, because we on live. So
go ahead.
we read the charts from left to right, right?
Right.
So with the 3 wise man pattern, how are you calling that high before you call the lower high? And that's throwing me off. It's just the visual of it is killing me because it's a lower high, well, it's a lower high than a higher high or a high. But you're saying high, it seems to me like that low should be further down.
I need to step away for a sec, guys.
All right, cool. At what point are you talking about?
Hold on.
And see, this is the thing. That lower high, that dang old thing ended up working. It just went further up. I thought, ooh, boy. That's crazy. See? What?
That's your high right here. Right?
Right?
Then how is this your low? That comes before the high.
That's right. It's left, right? It's to the left of it, right? So you lead left to right. So that's your first low. Then you're high. And then you come down here, it's key. I'm gonna show you. That is
okay, so you see where you drew it, you said you got a high, then a low. You should have said
I'm saying that it's gonna break that low that came before it.
Oh, I see what you're saying. So that's just so it's really a high and a lower low.
Right, but you don't call it a lower low. You just call it a low. And then no, you call it, I'm sorry. I'm sorry. You do call it a lower low. I apologize. I got this discombobulated. So right here is a low. This right here is a lower low. This right here is the lower high. And that thing is, watch this. You had a market structure that fell up and down to give you an ABC pattern. This right here is, ladies and gentlemen, this is a classic definition of an ABC pattern right here. This is like a perfect ABC pattern that's happening right now.
It's happening right now.
Yeah, it's a perfect. I mean, when I say it's a perfect ABC pattern, it's perfect.
Which chart? 300?
On the 900.
900, okay. Cool.
So watch this.
How do we? Is that divergence on the 8100?
Huh?
Is that divergence on the 8100?
Right, it is a version on 8100. But let me make a guarantee to you. This thing is going to go up here in just a second. I promise you that. It's going to be up above 60 here shortly. And this is when Keith going to say some flip mouth like, well, shit, we should go and put on 15 contracts.
You said guarantee. Man, you told me
There
something
no guarantee.
one time, if you know it's going to work, throw 20 on that thing. You said somebody told you that. If I know it's going to work.
And I mean, from a literal standpoint, if you do know that, that's what we're getting to. But that's where the adding thing comes in. Because you always, watch this, see if anybody else can figure this out. Anybody can answer this question, I'd appreciate it. You always got to assume you're what?
Wrong.
Boy,
You're wrong, correct?
you light years ahead of the crowd, though, because I'm trying to tell you, if you assume that you're gonna be wrong every time,
Hmm.
and then when you prove yourself to be right, you add on. Ron Jones, I almost want to just walk over to Marriott. I don't even want to drive. Just walk to Marriott in the damn rain, give a hug. Just be like, that right there is pretty damn good, boy.
That right there. So I know.
This is a very interesting situation because now I have a definitive market structure on mine.
Mm-hmm.
On my 8100, excuse me. So Ronald, you're up 6.5.
No, I'm up 7.
So you're up 70, and Ronald, Quentin is up 6.5. Okay, that's 13 points. Yeah, that's how you do that thing. All right. But I'm just trying to get you to read price, and then the indicators allow you to confirm what you're seeing in price. But this is what I know. Don't nobody know they seeing in price. Nobody knows that. Uh-oh. Uh-oh.
That's the three wise man right there.
Uh-oh. Yep. But I knew that thing was going down when I wasn't gonna take it because I figured it was a up move on a larger time frame, but this thing had went into a trend.
Yeah. Ooh. So what would the entry be on the arrow, you said?
No, the entry, yeah, for the ABC pattern. I mean, for the ABC pattern. I mean, for the lower high. Something happened.
Yeah, so hold on. So
Minute news at 12.
What you got, Ronald? Hold on. What you said? Hold on.
wasn't there like a market structure there, like around 125 on the 900?
There's an inside ball market structure.
That was not a market. No.
Yeah, it's an inside ball market structure. It's not a market structure we use.
Well, you can't take any of that if we're doing it by the system because the 8100 is a long-term minimum range.
No. You can't. You can't. It's a trade,
It's
but it's not a
divergent trade, though. I mean, it's divergent, so that makes it kind of.
So watch this.
That's what I go ahead. Sorry.
That's a trade right there. Yep, that's it.
That thing right there just dropped though. Ooh, that's tough.
That was a divergent high trade. So, which we're not taking. But ooh, that right there. Hey, that's a pretty good divergent trade. And you said divergent trades are going to be ABC patterns with you.
Now see, watch
Entry
this.
about 33.
What are you talking about?
You said watch this. You about to call a trade?
No, I'm saying you got the high, you got a lower low. It goes up, and I'm talking about the 8100.
All right. Yeah, I
See,
can see. I can see you clicking now. Your mouse pointing now.
you can see it.
Yeah.
So you have a low, a high, a low. It pulls back. It's going to definitely come back and break this bottom, which will give you the B part of the ABC pattern because it is in a definitive uptrend.
Mm-hmm.
And that's how I read what's going on. Like this right here, I was telling y'all that it was a potential ABC pattern, except for it got getting up here. It usually doesn't do that like that, but it gave you that market structure up that failed, and then it came back down, and then it gave you this inside ball market structure, which is some bull crap, but it gave it to you. That's nice.
Hmm.
That's nice. But everybody's up today.
Mm-hmm.
Keith, wait a minute. What are you up today?
I'm up 10.
Good job. Good job. Oh, this thing's sick. I thought it was going to 900. It's coming back down to 700. Good night, America.
Mm.
Oh, this thing right here is in trouble, boy. That's interesting.
13.22.
Put you on the spot, Keith. What trade you took the trade I called earlier, and you took another one?
I took one trade, got 10 points.
Okay, cool.
I didn't take the one you called because I was trading different parameters and it didn't
I
match
got
to
you.
what I had. So,
I got you.
um,
Do you mind sharing your trade or just sharing the time of your trade?
yeah, I'll share it. Okay. 10:09:38.
You took that long.
Yeah.
What two charts did you base it off of?
I took it on the 300, but I looked at the 900 for guidance.
Oh, so you took this right here.
Yeah. Oh, no, I had an arrow.
Huh?
I had an arrow on mine, but it's cool.
We got market structure on the 900. Yeah, I think it's gonna continue down.
Market structure on the 900.
Let's see what we got here.
One move.
No, man, don't take that trade. Tell me why. Tell him, look at my chart, look at my 900, and tell me why I'm telling him don't take that trade to the downside. It's real obvious.
It's the third move, but then it's also divergence to go up.
Yeah, it's the version to go up, Ron. You see that? And if you don't, that's okay. I just need to know if you see it.
No.
Cool. Right here. And you see how I said it was going up, but it's no harm, no foul, because I'm not sitting up here trying to guess nothing. My premise was it's going up to 900. I was wrong. YouTube land, let me say that out loud. I thought it was going to 900. I was wrong. But you know how I'm doing well? I didn't just assume and get into the trade. I wait for everything to line up that I want to see in order for me to take that trade. Let me explain something to you. You have to have a set of rules that you live by in trading, and you can't deviate from those rules. If you don't have a set of rules, then you're called a discretionary trader. I'm not saying you can't make money as a discretionary trader. I'm just saying it's harder. When you have a set of rules, it allows you to trade in a lane versus just getting out there trading because, ooh, the sun is out, so everybody's happy. I'm going long. or ooh, I had to scratch my forehead. That must mean that everything's gonna fall down.
Oh shoot. Hey man, I'll be back. I gotta go pick up Naila.
Talk to you later, man. Do you see why that trade is not working?
How long you trading for today?
Oh, I'll be here all day. This is gonna be a big. I'm unpacking the entire suitcase.
All right, I'll be back in about 30 minutes.
Okay. I'm trying to get there, Ron. I'm trying to get you a trade, but I'm trying to make sure we stay within the rules. You know what I mean? Because there are plenty of trades that I see, but they just don't match up with the rules that I've set forth for everybody else to trade by. Does that make sense?
Yeah.
Because if I just go out here and tell you, if you see this, take the trade, boy, you'll be over here trading all day. And then that's when burnout happens. And that's a real thing.
Burnout. What you mean by burnout?
So this is a very brain intensive job, and you won't recognize how tired you are till after you stop. Does that make sense?
Yeah.
So trying to keep. I want to prevent that from happening to anybody. All right, I'll be right back. Give me a second. Okay, everything's turning red, huh? Whoa. Whoa, that's interesting. All right, ladies and gentlemen, we'll go ahead and call it for the YouTube feed. We got a lot of great information out today. But we'll go ahead and call it today. Go ahead and call it. Y'all just, and all that you do, get an understanding. And we unpacked the suitcase for y'all today, so it's a lot to go over. So please take a listen. And we'll see y'all tomorrow. All right.
And don't forget to subscribe, like the channel, and email support@theprophetstalker.com.